Three, two, one. Good evening, ladies and gentlemen. This is James from Dividend Stock Talk, brought to you by the 10-Minute Trader. Ooh, let's try this one more time. Hey, Brandon's here. How's it going there, Mr. Brandon? Oops, cancel that. Wave. Just saying hi. Good evening, everyone. This is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, taking you along for the ride for a safe, predictable, and consistent 1% per week. Now, how do we do that? We use nothing but pre-qualified dividend stocks, and my friends, those are companies that have consistently increased their dividends for more than 20 consecutive years. Well, you can pick whatever you want. I like, what up, man? Woohoo! Brandon's here. Okay, Michael's here. The one, the only, the original James. Yes, so just so I get to know, you guys, there are a bunch of imitators, or what do you call those? Copycats? Let's turn this around so we can see what we're doing before people freak out. It's backwards. No, it's not. Okay, so there are 27 as of this moment. 27 per another day, another 1%, my friend. Brandon, way to go. I actually did some weird trades today. Got some really big numbers. It was kind of strange. It was kind of nice, though. Nice and strange. Huh? Is what it is. All right, so anyway, like I said, there's 27 other people pretending to be me. So if you get a notice or an indication, a letter, an email, whatever, saying that it's me, no, it's really not. Sorry, I only have two websites here on TikTok. One is the one you're enjoying at the moment. The other one is my brand new channel, and that is the 10-Minute Trader. A little bit different over there. Haven't really done any marketing on there yet. Haven't done any major pushes or anything like that. But it is what it is. Let's get rolling. Let's get the disclaimers done, over with, and out of the way. Lucky Larry, good evening. First of all, I have no professional affiliations to anything whatsoever. Jessica King, hi. Didn't Rerun used to say that, and that's my mama? Hi. Okay, anyway. What am I thinking? Oh, yeah. I have no licenses whatsoever other than the license to drive a car, license to drive my children insane, and also a license to make everybody extremely uncomfortable. Hey, what is your average yearly return with your strategy? Over 50% per year, Tyler. But thanks for asking. Anyway, most people usually start out with a hi, hello, how you doing? But, we can start with that. Brian, sold some M17s this morning, in the money already. Nice. Bought Walgreens today, and it's making money already. Okay. It was what's ha. Okay. Hey, Mikey G's here. Now, please, you guys will actually do some of the trades I say. I do hope you are doing some research yourself. Don't believe a damn word I say. Do your own research. Mike, what's happening? Hey. It's Fat Albert. And I'm going to sing a song for you. And Bill's going to say a word or two. We're having fun now with me and all the gang. Learning from each other while we do. What's a good brokerage site for beginners? Pot Raptor. I honestly can't answer that question for you. I don't know anything about you, so I'm not quite sure what it is you're looking to do, what you have to bring to the table, so to speak. I mean, what do you know? What are your goals? Oh, that was a good one. I love a good sneeze. So for a beginner, your best bet is to go on YouTube, do a lot of researching, find out how to buy stock, how to sell stock. How do you go about your research when evaluating a stock? Brandon, that's a good question. Mike, thank you for that. Hey, y'all, it's Meemaw. Hey, Meemaw, how you doing? So how do I do my research? Well, my research is very simple, okay? Now, I kind of cheat when I do my research. What do I mean by that? Well, I look at the list. There's actually a list that is free to anybody who wants it. Some other guy's account that never thought about selling calls only. Glad you said it. I have been trading a traditional wheel. Now, don't get me wrong. Traditional wheel's a good thing. Okay, NVIDIA, sorry, I don't do NVIDIA at all. And Miss Sheila's here. Woohoo, Miss Sheila. Okay, so as I was saying, how do I go about doing my particular research? My research is simple. I actually cheat. First time on Patreon this morning. Good session. Yeah, Rich, it was a long session this morning, about 2 hours. We had some good questions. And a bunch of good trades today, too. As I was saying, how do I do my research? Simple. I go to Google. That's it. I go to Google. Okay? First list I look for. Dividend Kings List 2024. Mamas! Mama's in the house! Woohoo! Woohoo! Mama's in the house! I get way too much energy this evening. Yeah, I go to Google. First research. GD, how you doing? First thing I do. Dividend Kings List 2024. That's 54 companies that have increased their dividends for more than 5 decades. That's 50 years. Next list, Dividend Aristocrats. 25 years of increased dividends. Many of the Dividend Kings are not don't offer weekly options. So you're absolutely 100% correct, Brian. 100% correct. Not all the Dividend Kings have weekly options. No, neither do all the Dividend Contenders. Neither do all the Dividend Aristocrats or the Dividend Champions. But I like those lists. What do you think about LTC? What the heck is LTC? Okay, MHC. Let's jump on in. No, hi, hello, how you doing? How's life treating you? You okay? Blah, blah, blah. No, just what do I think about LTC? LTC. Whoops. How about I do this first? Click on that. LTC. No. Wasn't that quick? You ask, you receive. Why don't I like LTC? I know absolutely nothing about the company. Now, when I say I've never heard of a company before, usually what that means, I love you, hair eater. That's an interesting name. What do I mean when I say I don't know who they are? Well, I've been doing this long enough. I know almost every company that increases their dividends for more than 20 consecutive years and has weekly options. This company right here has monthly options. See, 16 August, 20 September, 15 November, 21 February. What am I supposed to do with that? I can write a covered call on these once a month. That's 12 times a year. Personally, I like weekly options. Weekly options is 52 weeks in a year. It's just a numbers game. Nothing at all against the people that might work at this company. They might be the greatest people in the world. For all I know, my grandmother's sister's aunt's cousin, little brother might work there. How am I supposed to know? I know nothing at all about that company. But I do know it doesn't fit my parameters. What am I looking for? That's a question you need to ask before you do anything. What am I looking for? Me particularly, I'm looking for a safe, predictable, consistent 1% per week. Now, the trading strategy I created was for my 9-year-old daughter. Now, when she was 9, she wanted to trade just like Daddy was trading. You know how little girls are, they want to do the same thing Daddy's doing at 9 years old. So I had to come up with a trading strategy that was simple, because remember, she was 9. Simple, safe, predictable, and consistent. And fifth, you're going to see a lot of 5s here. I come up with a lot of, anything I do is in sets of 5. That's the first 4. Simple, safe, predictable, and consistent. No way she could lose. Well, that's the kicker. Everybody likes that one. No way I can lose. Well, it's simple. If you buy something, number 1, okay, that's the 5 criteria. Now we come up with the 5 rules. Rule number 1, never buy something unless you want to hold it long term. So anytime you buy anything, LTC, I never heard of them. So number 1, if I've never heard of the company, why would I be looking at it? Okay, I only want to buy companies that are consistently profitable. How do you figure that out? Well, to figure out if they're consistently profitable, you got to look at the earnings reports. You got to look at the quarterly reports, the quarterly projections. You got to look at all the financials and all that crap. Or you can bypass all that needless crap and just go straight to the dividends. Why go straight to the dividends? Well, by going straight to the dividends are the portion of the profits the company makes that they share with the investors. So to save myself a lot of time, if the company is consistently profitable, increasing their dividends every single year after year after year after year, they must be doing something right. Do I really honestly care about this right here? Going from $30 all the way up to 38 or all the way up to 50? No, I honestly don't care. Okay, I'm not looking for capital appreciation. I don't want to put money into a stock and have to wait 3 to 5 years in order to be able to cash out and take a profit. No. I'm 60 years old, retired. I want to take the little money that I have and set it aside and consistently have a nice income coming in from it. What do you think about PLTR? And it's 2 weeks before the EX dividend date. Do not gamble. Interesting. So do not gamble. You think PLTR is a good idea. PLTR. Is it okay if I disagree with you? This is kind of confusing because it has weekly options. And the chart looks halfway decent. But what is it that we don't see here? Well, give me a second. And we're actually going to go to YouTube. Oh, wait a minute. Before we go any further, can somebody in the audience please tell me, is this screen up and running on YouTube okay? So the screen behind me is live on YouTube, so it makes it easier for you to see these little tiny numbers. These numbers are going to be important a little bit later on. All right, so PLTR, great. We're going to go to Yahoo Finance. Ooh, that's some stuff I got to show you. I was searching around my database. Look at this is information. These are my trades from 2012. Some more from 2012. January 2012, January 2012. There's a whole bunch of them. Anyway, that's not what we're looking for. What the heck am I looking for? Okay. Yahoo Finance. Okay, what I want to look at is PLTR, is how often have they increased their dividends? Because that's important to me. Because if the stock goes down, I want to know, are they continuously going to increase their profits that they're sharing with me? All right, the summary, I think they don't have any dividends at all. Because when they don't have a yield, it usually means there's no dividends. Dividends only. All right, yeah, PLTR, no. Sorry. AbbVie, ABBV. Now, AbbVie, I believe, is the dividend king. Well, these are all the trades for today. If we want, we can look at these a little bit later on. These are all the trades I made today in this one particular account. That's not what we're looking at the moment. We're not looking at this at the moment. We're looking at AbbVie, ABBV. Now, we're going to say no to AbbVie right away. Not that I don't like AbbVie, because I do like AbbVie. But the reason I'm saying no to AbbVie this week, hold on, I'm going to change this. And then I got to change this, so you guys know what we're looking at. Now, the reason why I'm saying no to AbbVie this week, look how high it is. 186. That's the high of the year. No, I don't play that game. I don't buy at the high, wait for it to go higher. I don't do the thing. All right, so sorry. AbbVie's a great company, don't get me wrong. But I'm looking at AbbVie probably in 3 weeks. So let's take my book. Ah! Where's my book? Hold that thought. Got it. I got my trusty old book. Alright, got my book. Every time I write something down. Alright, this is where we're here today. This is for next week, which is actually this week. Okay, that's next week. This week, next week, 2 weeks. I'm thinking AbbVie in 3 weeks. I don't know, what do you guys think? 3 weeks? Because look where she is now, 180. We got to bring this thing back down to somewhere around 160. So I figure 1 week, 2 weeks, probably 3 weeks. We're going to put AbbVie down for 3 weeks from today. A, B, B, V. Now, some of you guys might want to jump in before then. Hey, that's totally up to you guys. We're going to go over this list today. All right, put that right there. So AbbVie is going to be a no only because, oh, I missed that question. So can you buy on Tuesday? Yes, you can. Tammy, how are you today? All right, so let's take a look at some of these questions. And it's only 2 weeks before the EX dividend date. I have some other guy, I have no idea which one you're talking about. Medina. Let's go back to her or him. Medina, you buy your covered calls on Monday and then let them completely expire on Friday. Oh, Medina. You're right on the bat. Right on the ball. So it's kind of curious. You knew exactly what it is I'm doing. So you're right. You're 100% correct, Medina. It's a REIT. Mikey, I have no idea what we're talking about. AbbVie. Bruno, we already looked at AbbVie. It's going to be a no. Best REIT there is. Oh, Bugs Bunny. Woohoo. Now, I haven't picked on O for a long time. So, Bugs Bunny, you ready to get picked on? Because I love picking on O. O is absolute horrid, in my humble opinion. For me, it's an absolute no, and I'm going to show you why. Okay, let's take a look at O. Number one is it is a monthly, which means even though they pay monthly dividends, they only have monthly options, which means I can only write a covered call on O once a month. That's only 12 times a year. Sorry, that doesn't work for me. I like 52 checks per year, not 12. Sorry, 52 is better than 12. Tammy, if it expires, do you lose it or buy the shares? No. Alright, next, there we go. Still shooting the videos over there. Now, for those of you guys who don't know, I am starting another channel called The 10-Minute Trader. And we're ready to go. Canu 429, how are you today? Alright, so let's go to some more of these questions. Alright, we're picking on O. And I'm telling you why I don't like O. Some people like it, some people don't. Me, I don't like it. Because I believe, my humble opinion here, Mr. Bugs Bunny, that it's a monthly optionable stock. The numbers just don't work. You ain't going to get over 24-25% rate of return on this pig, if you ask me. Probably shouldn't say that. Probably some nice people that actually work there. Okay, now we're going over to Yahoo Finance. Now, Yahoo Finance, we're actually going to go into the data stream. What is the data stream? Well, the data stream tells me where's the high, the low, the open, the close, the volume, all that kind of nice, neat, fun stuff since it began. Okay, so we can go all the way back to the 70s and 80s on Yahoo, look at all the history of this company. So let's take a look and see how well O does with their dividends. Alright, so we want to go back and we want to look at all the dividends they have, because I like 20 years of increased dividends. So let's go all the way back to O. Alright, here we are. Look at 2010, 2009, 2008, 2004, 2002, 2000, nice, 97, 96, 90. Alright, so it goes all the way back to 1994. Woohoo, nice. Alright, 1994 they started out at 7 cents. Then they jumped up to 8 cents in 95. 96, they were still at 8 cents. They didn't increase. They jumped back to 7 cents for a little bit, back to 8 for 97, no increase. 98, still at 8 cents. 99, still at 8 cents. 2000, it jumps up to 9 cents. 2001, still at 9 cents, no increase. 2002, 9 cents, no increase. 2003, halfway through 2003, they go up to 10 cents. 2004 to 11. 2006, still at 11, so nothing in 2005. 2006, all right, anyway, so 13, 14, they stayed at 14. Holy cow, how long did they stay at 14? Okay, from August 2008, 2009, 2010, 2011, 2012 to July 2012, they didn't increase at all. That's like 3 years with no increases. Okay, Bugs Bunny is not looking good. 15, 18, they did 18 for a while, and then 2014 they went to 0. Oh, wait a second, no, those are just odd ones. 15, 15, 16, 21, 22, 23. So they stayed at 23 for a while. Okay, January 2020, 23, 21, 25. All right, 26. Okay, so great. So they periodically increase their dividends. All right, fine. Now, let's take a look at the summary. This is where you're not going to be happy. All right, you ready for this, Bugs Bunny? Do you see this number right over here? Forward dividend and yield. Forward dividend, $3.16 a share. That's your profit, okay? $3.16 a share per year. Per year, okay? That is 5.43%. Now, Bugs Bunny, correct me if I'm wrong here, but I'm showing you a way that's safe, predictable, consistent to get 1% per week on a weekly optional stocks. Now I have over 300 of them. This one in particular that you like here is paying 5%, 5.4, forgive me, 5.4% per year. Now, I'm not sure about you, but I kind of like the idea of 50% per year as opposed to 5% per year. And it's a monthly, which means I can only do a covered call 12 times. That's it. With a weekly optional stock, I can do a covered call every 7 days. And every 7 days, I can get a paycheck. What does a paycheck look like? Well, hypothetically speaking, let's take a gander at one. Let's take a look at Macy's for a second. Okay, Macy's at $17.09. So if we do the 17s, we're getting 33 cents. Now, I know 33 cents doesn't sound like a lot of money, but let's check it out. Clear that out of the way. 33 cents is the profit. If I buy the stock at the current market price, which is at this moment in time $17.09. Now, a covered call is where you buy the stock first and then you sell an option, a call option, which is a stock option. I don't know if you know about, but there's lots of information on covered calls on YouTube, Vimeo, or any one of those video channels. Now, if my profit, okay, if I buy it at $17.09, sell it at 17 because of the covered call, I can buy it at $17.09, sell somebody that writes to buy it from me at 17. I'm getting 33 cents. All right, fine. I'm going to lose 9 cents at the top, so I'm walking away with 24 cents. Now, I know 24 cents doesn't sound like a lot, but let's do the math. Let's clear that. I'm walking away with 24 cents per share. All right, great. What is each share costing me? 17 bucks. Okay, so at 17 bucks, that's 1.4%. Okay, Bugs Bunny, did you see that? On Macy's alone, it's 1.4% for 1 week. Well, for the fun of it, let's multiply it out by 52 because there are 52 weeks in a year as opposed to 12 on the monthly. So at 1.4% per week with Macy's, that comes to a grand total of 73% for the year. I'm not quite sure, Bugs Bunny, but I kind of thinking 73% per year is much better than 5.3. But I could be wrong, and I have been wrong. I've been wrong many a times. All right, so that's Macy's. I do like Macy's. Macy's is my favorite. All right, so I'm respectfully, Bugs Bunny, I'm going to say no to O. Every time it's brought up, it's always been a no. Then what about Clip? Well, I can tell you right now. See, I know who O is. I have no idea who Clip is. So usually when I say I have no idea who they are, it's usually going to be a no, because it's a monthly. When I say I want weekly options, sometimes I understand that my speech may be impaired a little bit, or I might not be able to come through clearly. But I like dividend stocks that have weekly options. And they've increased their dividends for at least 20 years. How do you make money? Monroe, New Jersey talk. Hold that thought for 1 second. All right, so MHC, Clip is a big fat no. Sorry, never even heard of them. D1R, Dirt Nap. Dirt Nap Angel. Hey, James, it's been a while. Glad to see you're feeling better. Thank you very much. Okay, so Monroe, New Jersey talk. How do I make money? Well, nice that you say something to that effect. Let's take a quick gander at this. We have members only. Blah, 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 blah. Huh. Let's go over to the 10-minute trader. Now, this is for you, Monroe, New Jersey talk, right? This is the 10-minute trader right here. This is the website. If you do some research on it, you'll see that I've owned it for close to 20 years. Coming all the way down to the bottom right here, where it says my current trades. See that right there? Current trades 2024. All right. So if you want to see them all, okay, here, count number 1. Beginning of January 1st, 2024. That's this year. I do this run up every single year. $117,434. What is 1% of 100,017? Well, that's $1,100. So if I'm getting 1% a week on this one particular account, I'm bringing in $1,100 a week. Okay? Roughly 1%. Roughly 1% of $117 is about $1,100 a week. That's how I make my money. This other account here, 100,000 cash, 100,000 margin. It's borrowed money. Don't do that. So if you want to see all my trades, click on the view all. And what pops up? Lo and behold, there it is. Every single trade I made so far this year. Now, I do this every single year. Every single year, I start from zero. I take an account and put $100,000 into it, and I do a running tab. A running tab of what my trades are, okay? Week number 1, here we go, right here. Macy's, General Motors, Ford, CVS. All right, that week I made 2.12%. Week number 2, Macy's, Ford, General Motors, Clorox, Lowe's, and Ford. Week number 2, I made 1.3%. Okay, you can keep going. Okay, week number, I don't even know which one this one is. Week number 11, Kohl's, Albemarle, Paramount, Nordstrom's, Ford, and New York Community Bank. Hold on a second. Come on. I'm waiting for the videos. Come on. There we go. And here. And there we go. And we're rolling again. Okay, so week 11. All right. New York City Bank, New York Community Bank, Nordstrom's, Ford, Paramount, Albemarle, Kohl's. What did I make that week? 3.9. Week 12, 0.9. Do I make 1% every week? No. Close to it. This week right here, 0.9. What do I have? I have Kohl's, New York Community Bank, Nordstrom's, Ford's, USB. Cool. I only made 0.9 that week. But anyway, they're all here. Everything except for last week's. Here we go. Week 23, 24, 25, 26, 27, 28, 29. So we are actually, at this moment in time, it is Monday, the 29th of July. We are currently in week number 31 for the year. So no, I have not posted week number 30s yet. So I will get to that. All right, let's go back. Right here. So how do I make my money? I make my money actually trading. I get 1% per week. All right, motivation, yes. Brian, do you typically avoid selling calls when the company is going into earnings? Brian, to be 100% honest with you, I don't pay attention to earnings. Seriously, I don't. Hey there, I need more capital to trade with you. Okay. Choose your hard, take your time, don't be in a hurry. Okay, my grandson started out with $50. I think my first account was like $1,500. Can you look at Bank of Marin Bank Corp? All right, Flacco, you actually give me the stock symbol because I've never heard of that company. And if I never heard of the company, more than likely it's going to be a no. How much to become a member? It really depends on which level you want to be at and what kind of perks you want to collect. If you're new here, your best bet is just coming here free at night and seeing what's available here at night. Now, the morning trading group is for, don't take this the wrong way, serious traders actually want to be in a community that everybody trades and everybody has the same wavelength, so to speak. So we all try to help each other out. And yeah, I may come up with some on the list, but a lot of the people in the group do have great trade ideas and do have great trades every once in a while. All right, also, please check RBLX. It has no dividends, but, well, choose your hard. As long as you put it that way, it has no dividends, but, yeah, no dividends, no thank you. I got 300 companies I got to keep track of. 300. Okay, there's 9,598 companies in the stock market I can invest in at any moment in time. I got about 300 that I keep track of that do consistently increase their dividends every single year and do have weekly options. Why would I possibly want to add 301, especially when 301 doesn't meet the parameters? 20 years of increased dividends and weekly options. Okay, I have more than enough. There's more than enough companies to invest in on a daily basis. You've just got to figure out what it is you want. If you want to buy a stock and have it go up through the roof, yeah, this ain't the place for that. Terribly sorry. As much as I love the audience, as much as I love people to help people out, if you're looking to make a lot of money really quick, this ain't it. This is boring. This is slow. This is like molasses in February. All right? Really slow, really boring, really repetitive. But what else is it? It's safe, it's predictable, it's consistent, 1% per week. Okay? I don't like risky trades. I like simple, I like safe. Okay, so RBLX is going to be, I'm not even going to waste our time looking at it. If it doesn't have dividend, it's not even going to be worth our time taking a look at it. LTC, Litecoin, I don't do any coins whatsoever. Okay, so if anybody ever asks you my opinion on cryptocurrency, Forex, what's the other one? Cryptocurrency, Forex, there's another one, I forget what it's called, futures, yeah, they're always going to be a no. The premiums in RBLX are crazy. Okay, I'm sure they are. There are a lot of good companies out there. I'm not saying anything at all bad about RBLX. I have no idea who they are. Okay? That's one reason I won't look at them, because I've never heard of them before. All right? If they don't have a dividend, what am I going to collect when the stocks go down? It's not an if. It's not an if the stock goes down. It's when, because that's all stocks do. They go up, they go down. They go up, they go down. Look at this one right here we're looking at, Clip. I've never even heard of them. Way up here at 19. Down, up, 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 down, up. That's all it does. Okay, granted this one's flowing all the way to the bottom, but it goes down, it goes up, it goes down, it goes up. That's all they do. So if I'm going to be looking at a stock, I want to make sure while she is going down, am I collecting in higher dividends? Because if I get stuck with a stock and everything goes to hell, well, I want a company that's consistently profitable. One that I know is going to be consistently increasing their payouts. Now, how can I say that? Well, let's take a look. Some of the companies are over 100 years old. What has happened in the U.S. economy over the last 100 years? Well, we've had World War I. We've had World War II, Korea, Vietnam, Kuwait, Iraq, Afghanistan, all the crap over in the Gulf. We've had the Great Depression. We've had the great stock market. We had the stock market crash. We've had the crash of 29. We've had the crash of 87. We had a crash in wasn't it 2000? Okay, in 2000, and again in 2008, and again in 2021. It's like every decade we have a crash or a big pullback. Yet these companies that I like, that I look at, have consistently increased their dividends every single year, even through the pandemic, when companies lost between 50 to 80% of their value. I can show you some companies that lost 70 to 80% of their value in 2008 and again in 2021 during the pandemic. But yet they still consistently increase their dividends. What does that tell you? Well, that tells me those are the companies that I want to invest in. All right, let's continue. James, did you buy Mara today? $1,000 is not enough. Hold on. I'm missing all these questions. Oh, actually, it's the Dividend Aristocrats. No weekly options, though. Yeah, Brian, I get that. Bought me some Mara. All right, Flipper, way to go. We're going to take a look at Mara in a little bit. Remind me a little bit. Let me go through these questions first, and we'll take a look at Mara. Well, that's the payout ratio. All right, Brian, terribly sorry. I just don't like O. All right, it's monthly options, and one thing I don't like about monthly options. Here, let's take a look at this one for a second. Let's take a look at this. $12.95. That's where it's currently at. Okay, here's the last 30 days. 30 days ago, we opened up at $12.98. Okay, shot all the way up on the 12th of July, $13.50. From there, she retraces a little bit of a bounce, comes down, finds the 30-day bottom on Friday. So Friday is the 30-day bottom. Today was an up day. Lovely. Let's take a look at the option chain. Now, if I'm going to buy this tomorrow morning, it's going to be $13.14. Well, let's see what the $13 is going for. Is that correct? It's going for $0.05. It's not even offering a premium. Why the hell would I invest in something that I can't get a monthly return on? It's a monthly optional stock. Okay, it's $13. Okay, well, it's paying nothing. What else is in that price range? Well, look at Ford. Ford's at $11. And what are they paying? Well, at least they're paying 17 cents per share, and that's on a weekly basis. And the one you just had me look at is paying $0 on a monthly basis. What the hell are you thinking buying crap like that? But that's my humble opinion. That's just my humble opinion. What the hell are you thinking about? Because it's your personal money. If you're taking your money and you're putting it into a company like that that's not giving you the best rate of return, well, it's, oh, look at that. How do I look in a hat and a mustache? I hate mustaches because they're itchy. I can't get past it. Sorry, I tried it once. I tried the mustache, the goatee, the beard. Yeah, it's just too itchy. I can't deal with it. But thank you for that. That was kind of cute, kind of cool. Kyle, FBRT, PMT. I haven't heard either one of those, Kyle. Okay, now, Kyle, you do realize if I look at both of these and both of them are lemon, I'm going to give you a hard time. FBRT, Franklin BSP Realty. Yeah, no, it's a monthly. What do I mean? There's a difference between weekly options and monthly options. I want absolutely nothing to do with monthly optional stocks. They just don't pay. And I'm not quite sure why it is you guys aren't quite grasping that. If they're not paying, why are you suggesting them to me? Next on the list, PMT. PennyMac Mortgage REIT. That's another no. That's 2 lemons in a row, dude. 2 lemons in a row. Alright, so I have no idea, Kyle, what you do with your money, but if you're doing this, hey, more power to you. If what you're doing is working for you and you're happy with it, great, stick with it. This here, what I do here, now I don't give any advice. I'm just showing you what I do. iVault available. What the heck is iVault available in 22 hours, 8 minutes, and 18 seconds? What the heck does that mean? It's popped up on my screen. I have no idea. Kyle, terribly sorry. If that's your game, hey, more power to you. I don't do that. I look for a safe, predictable 1% per week. And I don't do monthly options. TSLY. Sean, really? TSLY? No. That's 5 no's in a row. Booper. Starbuckies. Ooh, I do have some Starbucks. I don't know if I bought Starbucks today or not. Did I? I'm not 100% sure. Hold that thought. Nope, no Starbucks there. No Starbucks there. Starbucks! Yes, I did buy Starbucks today. Check it out. Starbucks. $74.88. I sold the 74s for $3.29. Holy cow. What is that? That's more than 2%. Hey, I'm good with that. All right, let's go back. Take a look at Starbucks. All right, so Starbucks, check it out. A year ago, 101.10. The high of the year is a double high at 107.43. That was back in the middle of November. Okay, we had this big drop here 90 days ago. Check that out. Okay, but our 30-day bottom is right here, 71.55. So what happened at 71.55? All right, here's your last 30 days. What does that look like to you? Seriously, take a look at it. 30 days ago, we're way up here at 79. She drops down to here, 72.50, shoots back up, pulls back down to here. Here's our 30-day bottom right here, 71.50. Okay? Then she shoots on up 3 days later, 79.50, and then she comes down. New bottom here, 73.25. 2 days to the upside. That's my invitation. I jumped in on that one this morning because I love a 30-day high, come down to a new bottom. Now I isolate, or I say a new bottom. This is just me. You've got to figure it out for yourself. I say when I have a bottom and I have 2 up days in a row, that's my invitation. My personal invitation. You guys got to figure out, how do you figure out what's the bottom? Do you wait for it to go here and wait 1, 2, 3 weeks and then say, oh yeah, well, there's the bottom? Me, it's 2 days. Okay, so that's Starbucks. Now, if I want to jump in Starbucks tomorrow morning, now I already did it this morning, so you can't use the same numbers I'm using. The only numbers you're going to be able to use is if you want to do it tomorrow. Now, if I was going to do it again tomorrow, now I don't make any suggestions whatsoever. I don't make any recommendations. I'm just reading the numbers, and I'm just showing you what I think about the chart. Okay? 30 days ago, you cannot argue with the facts. 30 days ago, there it was. She drops down, retraces, drops down, finds a 30-day high, comes back down. Thursday, okay, here it was Thursday, here's Friday, here's today. Okay, those are all facts. I'm not making anything up. These are all numbers that you can get these basically anywhere. But here's the thing. If I want to buy it tomorrow morning, 75.20, right up there, the ask price. So when you're looking at the stock, this is the numbers you're going to read. The last traded price, 75.20. The bid, 75.10. Right up there, pay attention to the numbers. The ask, 75.20. Volume, 10,864,000. The open, 74.39. The high, 75.59. The low, 73.72. So those numbers are for the stock. So if I want to buy the stock tomorrow, I'll be buying at the ask price, 75.20. The closest strike price is going to be the 75. Now I'm losing 20 cents right at the top, but look at what I'm gaining. The premium for the 75 call. So if I buy it at 75.20 and I sell it to someone at 75, well, I'm collecting $2.88 as a premium for the covered call. So I buy the stock at 75.20. I sell it to someone else who has an opportunity. Okay? Has the opportunity to buy it from me anytime between tomorrow morning when I sell it and Friday when it expires. So see the date right here? 2 August 24. Here, right up here, see? 2 August 24. That's when it expires. 9 August 24. Well, that's 2 Fridays away. 16 August 24. Well, that's 3 Fridays away. 23 August 24. That's 4 Fridays away. Every single week I can do Starbucks over and over and over again. Now, if I do the 75.20, I'm collecting $2.88. Let's bring the calculator, clear that out. $2.88 is my profit, but I'm losing 20 cents because I'm buying it at 75.20 and I'm selling it at 75. So the 20 cents has got to come from somewhere. So we take it away from our profits right here, 288. We take the 20 cents off of that, and I'm walking away with 268. See, 268. But 268 is my profit per share. So 100 shares is 268 bucks. Okay, 1,000 shares it's 2,680 bucks. 10,000 shares it's 26,800. Anyway, it goes incrementally, but it's still $2.68 a share. So to find out what my rate of return is, this is my profit. I can take the profit and divide it by the purchase price, 75. Now, why 75 and not 75.20? Well, because I already subtracted the 20 cents off of my profit. Okay, it comes to a grand total of 3.57%. Now I say I'm looking for a consistent 1% per week. Well, here's the thing. If I have 6 or 7 stocks, am I going to get 1% off each and every stock? No. Sometimes I'll get 3%. Sometimes I'll get 0.5%. Sometimes I'll get 0.25%. Sometimes I'll get 1%. But when you average them all together, it averages out to well over 1%. I say 1% to make it easier. But this Starbucks trade, if I do this one tomorrow morning, buy it at $75.20, the opening price, sell somebody the rights to buy it for me at $75, here's the premium, $288, I walk away with 3.57%. Hope you like that. Stanley Tumchi? Okay, Stanley. You want to take a look at Siri? I don't know if I have any Siri. But we did have Siri last week. But she jumped up, made its move. I got out. I said, thank you very much. Took my profits. And I say, see you again when you drop. Okay, what do I mean by that? I'm going to show you in a second. A year ago, 535. We topped out in the middle of December at 579. Okay. The bottom was June 13th. And that was $2.48. Can you imagine that? Right here, take a look. $2.48 on the 13th of June. A couple of weeks later, look at 2 weeks later, we're at our high at 4 whatever. That's 100% change in 2-3 weeks. Well, of course it's going to be profit taking. And there was pullback, profit taking, retracement, whatever you want to call it. I like to call it profit taking because I'm an investor, and if I buy down here and I see stock go 10% up or higher, yeah, I'm out taking my profits because nobody ever went broke taking profits, and it ain't a profit until you take it. Brian, you want to take a look at EMR, Emerson? Give me a minute. Let me finish up with Siri first, and then we'll take a look at Emerson. So, Siri all over the place. Okay, she bottomed out at, what is it, 248? Shoots on up to 416, pulls back, shoots up, pulls back, shoots up. Now she's on a pullback. 3 days to the downside. The last 3 days. Yeah, I'm going to wait on Siri for another 2-3 weeks. So I'm going to actually write it down in my book for 2 weeks from today. Along with AbbVie, Siri. Alright, so there's Siri. PNNT. Drake, I've never heard of PNNT. But Brian, you want to take a look at Emerson. I like Emerson. Emerson is a dividend king, EMR. It means they've been in business for over 100 years and they consistently increase their dividends. So I like EMR. We're going to take a gander at it. Hold that thought while I get this video up and running. EMR. Emerson's going to be a no this week. Sorry, dude. But I'm going to explain to you why it's going to be a no. Give me 1 second while I get this thing running. Here we go. Now, whoops. Now, the reason why I'm saying no to Emerson this week, it's not that I don't like the stock. Take a look at where it is. A year ago, we're at 90. We bottomed out at 82. Shot up to 120. Well, now we're at 117. Now, for me, that's just a little bit too close to the high. See where it is? Shoots up, pull back, and then back up again. Yeah, it's too close to the high for me. Sohail, oh, you want to be invited to my live show? I'm going to say no because I don't know who you are. Now, for those of you who do want to be invited to the live show, okay, be able to talk to everyone else, I insist that you send me your phone number first, and I will then give you a call. We'll have a chat and see how well you can contribute to the conversation. Because one thing I don't want to talk, well, there's a bunch of things I don't want to talk about. Don't want to talk about religion. Don't want to talk about politics. I don't want to talk about anything other than dividend investing for weekly cash flow. Now, Denzel has a question over here. Denzel, would you recommend paper trading or putting in a little amount at a time while learning the market? Denzel, I'm going to agree with you 100%. And I do encourage people, especially beginners, even, ooh, what the heck? Ooh, check that out. Oh, it disappeared. Damn it. I have been trading for over 20 years, and I still paper trade. Okay, the reason why I continually paper trade is because I'm always coming up with new trading ideas. And the best way to do a trading idea is to actually do the trading idea and consistently trade. I missed a bunch of questions. I got to go back. Back. Oh, gotta keep going back further. Holy cow. Alright, Cooper said that. Where are you clearing through? You're talking about where am I clearing through? I honestly don't know. See, I'm using Thinkorswim, which is through Charles Schwab. So wherever Charles Schwab has its clearinghouse, that's where it gets cleared through. Those are the kind of minor details I don't pay attention to. It's like another minor detail I don't pay attention to. See these little letters over here? Okay, M, X, B, J, T, C. Okay, those are all the exchanges and where the actual trade is coming from. Do I pay attention to that? No. Why would I want? Why bother? I'm buying a stock at a certain price. I'm selling it to someone else to buy it from me for a certain price using a covered call, which is one of the safest trading strategies there is. Do I really care who does the filling of the trade and where does it come through? No, I don't really care whatsoever. But Denzel, to finish up your question, yeah, I do encourage everyone to consistently paper trade. Get used to the terminology. Get used to buying. Get used to selling. Make a bunch of mistakes because you do not learn from your successes. You don't. You got a success? Okay, great, fine. You learn from your mistakes. And the harder the fall, the more you learn. I'm chuckling because I know the answer to this one. The more you lose, the deeper it will hurt, and the more ingrained never to do that again. Now, I've made several mistakes in the past. Okay, I remember losing $12,000 overnight. That was very uncomfortable. That was, I think, back in the early 2000s, where I thought I knew everything. And then again, I lost another $15,000 overnight when the stock jumped up 16 points overnight. Yep, that was uncomfortable. The worst one was $91,000 in a week. That was the most uncomfortable one, and that was the hardest lesson I learned. Okay, trust me, that one hurt. Okay, when it hurts that much, you have a tendency to remember it, and you have a tendency to never ever repeat it again. So yeah, keep paper trading, keep practicing until you get it right. Starbucks, I like Starbucks. We already talked about that. EMR, I'm going to say no to EMR at this moment in time. Don't get me wrong, I love EMR. It is on my list. I bought it many times. Okay, 117.80 to 118 is going for 150, right around 1%. Okay, fine, dandy. But in my humble opinion, it's too close to the high. Okay, where is the run-up going to be? Because remember, today's Tuesday. We got 4 days left until Friday. So if I'm going to buy it tomorrow morning, I'm going to sell this week's option. Well, I want to make sure that it hits my target by Friday. Right now, 3 days to the upside, and it's getting awfully close to the 30-day high. So 114 or 117, that's a $3 rise, a $3 rise on a $100 stock. It's really not that big of a move. So I'm not too worried about it. But let's progress forward. We're going to look at Starbucks. WBA. Walgreens. Walgreens had another update today, and yes, I did buy some more Walgreens today. Alright, so Walgreens. A year ago, 30.66, slowly dropped and find our bottom. Our 30-day bottom was on the 9th of July. Now, we've been following and consistently trading Walgreens since January. We've seen it fall and drop. Now, I remember a couple people in the audience are saying, why you keep playing Walgreens? It keeps going down. And what did I say? Well, I said, well, that's awesome. we're going to find the absolute bottom. Well, this bottom right here on the 9th is the bottom of a 7-year period. I'm missing all these questions. Alright. Okay, so who just mentioned something about NVIDIA? Ant? NVIDIA prediction? Yeah, no thank you. Many of the dividend king, we already seen those questions. How do you make money? I already did that question. Can you look at, yep, already did that question. What's the new channel about? The new channel is about dividend capturing 2.0. A little bit different than this, but it's actually where I got my beginning 15 years ago. Bought Samara. All right, we already did these questions. WBA. All right, another red herring. $1,000, not enough. Well, when I said 1% per week, I said about $1,000 a week on that particular account. So apparently you weren't paying attention to that. But here's the thing: if I'm making $1,000 in an account and I'm spending 10 to 15 minutes a day, 5 days a week, well, that's about an hour a week. And I'm making $1,000 for an hour of my time, and you say that's not enough? Well, another red herring. I can't help you out. James, James, you buy Mara today? I did no bueno at EOD. I have no idea what EOD means. But let's take a look at Mara. M-A-R-A-N. Yes, I think I did buy some Mara today. Hold that thought. Not there. Yep, bought some Mara right here. 2,000 shares at 22.26. 22.20. Do you see that number? 22.26 is what I paid for it. I sold the 22 calls for 136. That's almost 5%. Almost 5% for that one trade today. So do I make it 1% every week? No. Sometimes I make more, sometimes less, but it does average out to 1%. Okay, so Mara, let's take a look at Mara. Why are we not liking Mara? Okay, so Mara a year ago was at 17.29, bottom out at 6.99. Okay, topped out, well, the bottom was in October, topped out end of February. Okay, and that top just so happens to be 34.09. The 90-day low, 13.88. Let's go to the 30 days. Last 30 days, tra-la-la. Here we go. Last 30 days. See that? 30 days ago, we opened up at 20.33, bottomed out on the 10th at 18.82. 4 days later, we topped out at 27.30. That's a nice move. From 18.76 to 27. Now, 18 to 27 is a $9 move. A $9 move on a $19 stock. Come on, people. That's over 45% in 4 days. Well, cool. See, there's your bottom, 19. High, 27. That's almost 45%. Well, of course, there's going to be profit taking all the way for Thursday. Friday was an update. Today we were eyeballing this one today, but she came back down again. But I already bought it, so it is what it is. I made over 5%, so for over 4%, so I'm okay with that. So yeah, I do like Mara. And let's continue. All right, more questions. Mike, wanted to buy Dell so bad, but waiting. Hey, Michael, let's take a look. I take $1,000 for 10 minutes of my day. Well, Dirt Nap Angel, okay, it's 10 minutes a day, okay, well, until you get good at it. It's going to be 10, 15, 20 minutes a day until you get good at it. Now, remember, I started out with 117,000 in that particular account, all right? So you got to figure out what you want to do, and I suggest you don't do what I do until you know what it is you want to do and you get good at it. Okay. So, Michael, you want to do Dell. Well, let's take a quick gander at Dell. Dell. Here we go. Now, I like Dell, and I actually own some of Dell. I missed that question. I just learned how to find the questions on YouTube. What's your play for tomorrow? Oh, if it expires, you lose. No, you don't lose anything if it expires, Tammy. But hang out, and we'll talk more about that in a little bit. So, I don't have any moves for tomorrow. Now, when I say I make all my trading on Monday, now I think I had 80, 60, 100, close to $200,000 I had to spend today through 3 different accounts. Okay, so between those, I do my trading on Monday because Monday is the highest time value. What do I mean by that? Well, when you're selling a covered call, there's certain things that make up the pricing for the options. How do they come up with these prices? Okay. How do we know what the 111? Why is the 11 worth 270? Okay. Why is the 115 worth 110? Why is this 113 down here worth 380? Well, for that, there's a big, huge mathematical equation, and it's called the Black-Scholes pricing method for options. It has to do with time, strike price, implied volatility, interest rates, a whole bunch of other things. It's a huge mathematical problem to figure out the pricing for this. Okay, great. What does it mean? It doesn't really mean anything. Okay, but let's take a look at Dell. All right. So Dell, at this moment in time, 111.41. See it right up there? The ask price 111.41. So if I want to buy this tomorrow morning, 111.41. So I'll be looking at the 111s, which are going for 270. The 110s are going for 320. Yeah, I'd probably go for the 110s or the 109s. Yeah. The 112s are going for 225. It's all simple math. Okay. What am I buying it for? What strike price am I selling? What premium am I collecting? What rate of return is that premium from the investment? Great. Well, that's just the numbers. Remember the 5 rules? Never buy something you don't want to hold long term. Never sell at a loss. Make sure it has increased dividends, weekly options, and make sure the numbers work. Number 5, make sure the numbers work. What am I buying it for? What am I selling it for? What is my rate of return? And what is the chart telling me? First thing I want to look at when I look at a chart is 5 things. High. Okay. Where's the high? Where's the low? Where was it? Where is it? And what direction is it going? Those are the 5 things I want to see. Every chart. This one is the 1-year chart. High, low, where was it? Where is it? And where is it going? Alright? Once I do that, then I want to take a look at the last 90 days. That's the last 3 months. Again, same thing. High, low, where was it? Where is it? And what direction is it going? It looks like it's coming to the downside. See it up there? Going to the downside for the last 90 days. Okay, from there, I also want to see if there are any noticeable patterns that jump out at me. No, there isn't. She drops, goes up, pull back, gaps up, comes back, gaps up, finds a high, gaps down, drops, up, down, so on and so forth. We're down here at the moment. It looks like she might turn and go to the upside sooner or later. So the last 30 days, okay, check it out. Last 30 days. 30 days ago, we opened up at 137.48. Okay, we topped out at 149.47. Oh wow, what the heck is this? Okay, verification. Ooh, lovely. All right. Yeah, so Dell, take a look. 30 days ago, we're at the 30-day high is 150.23, and it just keeps falling and falling and falling. Now, apparently, Thursday was the 30-day bottom right here. Okay, Friday was an up day. Today, she opened up and then she pulled back a little bit, so not quite there. I like 2 days to the upside. Even though today could be considered as an up day because it's higher than the 30-day bottom, not quite. Depends. All right, what does this stock normally do this time of year? This time of year, this thing usually goes flat. Now, the chart you're looking at here, This is called a seasonality chart. Let me pull back a little bit so you can get a big view of it. Okay, here's the big view of the seasonality chart. What does it mean by seasonality? Well, winter, spring, summer, fall. How do stocks react throughout the year? Well, it's January 1st, all the way to the left, all the way to the right is December 31st. The blue line represents the movement so far this year. This blue dot right here is exactly where we are today, towards the end of July, beginning of August. But this red line represents 10 years worth of data. How has it moved consistently over the last 10 years? Well, it's a slow, steady pace to the upside. Well, alrighty then. I like it. Alright, so let's go back to the next question. Because I like Dell. I actually own some Dell. And what did I do with my Dell today? Dell, here we go. Alright, so I'm into Dell at 128.86. 128. I sold the 117s. I sold the 117s for 165. Cool beans. Why did I sell the 117s? Well, I sold the 117s because I thought it was going to continue going down. Okay? So she opened up at 115. And I watched this here as she's dropping. I saw no indication of it turning around, so I saw it keep going down. So I said, fine, I'll sell the 117s. So I sold the 117s and got a nice little premium on that one. Okay, 128s, and I sold the 117s, got 165, which is way over 1%. Works for me. All right, next on the list. All right, Joshua Renshaw. Feeling on moving to small caps with some big, large caps reporting earnings late week. I have no idea what that means. I mean, I understand the words. I just don't understand the context. What's a good dividend company that pays monthly? Couldn't tell you. NTEP Angel, 100,000, and you can make it in less than 10 minutes. Wade, you're correct. Need an energy or oil one likely to meet that parameter? Well, there's a lot of those. You've got, let me think off the top of my head. You have ExxonMobil, British Petroleum, Occidental Petroleum, Chevron, Shell, Marathon. Those ones are off the top of my head. I already said ExxonMobil. But I'm not quite sure what it is you're asking. Because all my stocks are categorized on calendar. Whoops, where is it? On the calendar. By when they pay their dividends. Okay, when they pay their dividends, they have a tendency to go up. Joshua, feeling on KHC, thinking Buffett got in too early. I like the value it's been adding to my position lately. Well, Joshua, KHC just so happens to be Heinz Ketchup, and they are a dividend king. They've been in business for over 100 years. Take a look at that chart. First thing you want to see, the high, the low, where was it, where is it, and what direction it's going. Well, it's going to the upside now. Okay? Now, what are the numbers telling me? Well, if I'm buying it tomorrow morning, I'm buying it at 33.52. See it over there, 33.52? The 33.50s are going for 73 cents. Well, my friends, that's over 2%. I like over 2%. Do I sell leaps? No, I don't. Sorry, running amok. Look at the premium, though. Choose your heart. Okay, I have no idea, choose your heart, which one you're talking about. Okay, because the conversations, they skip, and I don't get to see every single entry. Chuck, QXO. All right, Chuck, you're new here, and I feel bad for telling you this. But before I do, let's finish up with Heinz Ketchup. Okay, a year ago, we were at 36.02, bottomed out for the year at 30.75. Now, as you can see, it looks like a lot of movement here, but look at the bottom. The bottom's at 31. Look at your top. Your top is 39. That's a lot of movement between 30 and 39. That's not a whole lot of movement. Hold that thought. Doing that video again. That video thing every 10 minutes. Come on, people now. Smile on the brother. Everybody get together. Try to love one. Come on. Let's go. Right, and there you go. All right. So KHC. So as I was saying, KHC, even by looking at the charts, the bottom's 30 for the year, the top's 39 for the year. That's only a $9 move. A $9 move on a $30 stock. Okay? $9 to 3, that's what? 24, 60%? Is that right? No, 10, 20, 30. That's a 30% move. Is that correct? $30, 9. 9 is what percent of 30? 3 is 10%. 60. That's a 60% move. Is that right? No. No, $3 is 10%. 10, 20, 30. It's only a 30% move. Sorry. So it's 30% from the bottom to the top. It's only 30%. But yeah, I'd be doing profit taking too. But let's continue taking a look. So at 33.55 to 33.50 is going for 73. That's more than 2%. But you got to come to that very last question. The question is always the same. Do I like Kraft Heinz? And do I like it at 33.52? Because when you're buying it, you're going to buy it as if you're going to hold on to it for a long period of time. So the question is not, do I like it? It's like the question is, why isn't it on your list? The company's been in business for over 100 years. Okay, we all love our ketchup, our Heinz 57 sauce. We all love those things. Okay? So, that being said, let's take a look at the last 30 days. Last 30 days. Tra-la-la-la-la. Here we go. Alright, 30 days ago today we opened up at 32.23. Bottomed out on the 11th at 31.58. Topped it off at 34.41 on the 18th. Pulled back, shot up, pulled back again. There's no real rhyme or reason which direction this is going, but it looks as if she's heading up. So here's the bottom. She's going to the upside. That's the way it looks. It looks as if it's going up. Okay. Now, let's take a look at more of these. La la. Okay. TikTok. James for Starbucks. If you already own the stock at 71, you can sell the 78 strike price just to collect premium. Let me pull back on that one again. S-Bucks. If I own it at 71 and it's currently at 75, I'm trying to get the thinking here. Okay, so I'm going to say a few things and I want to see if you understand them. Number one, it ain't a profit until you take it. Number two, nobody ever went broke taking profits. So if I'm into it at 71 and it's currently at 75, I'm not even going to bother with the premiums. I'm just going to sell it flat out, get that $4, and that $4 is more than 1% of 70 bucks. Because 1% of 70 bucks is 70 cents. But if you own it at 71, yeah, I could sell the 78s. 78s ain't giving me, well, they'll give me 1.62. Great. But why would I do that if I own it at 71? Why wouldn't I just sell it at 71 and get $5.30 for it? I don't know. It all comes down to the numbers. So no matter what happens, always check your math. Because your math is going to tell you what's your rate of return for the time frame in which you're investing. Now, most people invest for 5 years, 10 years, decades. Okay, well, I'm going to buy some Starbucks and I'll take a look at it again in 5 or 10 years. Alrighty. Hey, more power to those people. I love those people. Those people help these numbers out right here. Okay, it allows me to jump in, allows me to jump out. Get my 1%. That's all I'm looking for. Okay. That being said, let's see what other questions we have. Team Bubbles. I like to paper trade in the afternoon when it's slow. Okay. That works. There's no right or wrong answer to that one. You're not full screen on YouTube tonight. Uh-oh. Did somebody check to see if YouTube is working? Give me 1 second. I'm actually checking YouTube. Yeah, they're both there. Okay. Live 1, live number 2. This is me standing in front of the screen, and this is just the screen here. So, yeah, it's working. All right, Mike, we already looked at Dell. Mara doesn't pay dividends. It's a no. Was AR... Whoops. I missed a lot of questions. I hate missing questions because you guys think I'm not paying attention to you. Uh-oh. What did I buy today? Hold that second. Choose your hard. RBLX 200 plus premium on a $40 stock. Okay, did we already go over RBLX? RBLX. Okay. $40.57. Interesting. The last 30 days is right here. So why would I look at a stock that is so close to the 30-day high? That's number one. That's definite no right there. Then we want to take a look at the RBLX. Has no dividends. So why are we even wasting our time looking at this thing? Okay. Sorry, RBLX is going to be a no. What did I buy today? Thawkins. What did I buy today? MPW, Walgreens, Mara, Advanced Auto Parts, Ford, Macy's, and more Walgreens, and Starbucks. Yeah. Alright, I couldn't trade Mara for some reason. Said not a day trade. Bruno, I have no idea what that means. Simone, my friend, tell us about Macy's and Kohl's, please. Didn't we already look at Macy's? We already looked at Macy's, Simone. Okay? Last 30 days for Macy's. 30 days ago, we opened up at 1905. Check it out. 1905 over here. 3 days later, we're at the 30-day top. 2045. Okay. On the 15th, we're at our bottom at 16. What the hell is that? 1607. 1607. Now, she went up, she dropped a little bit, went up, dropped a little bit. Another bottom right here, 725. Thursday and Friday, both up days, was sitting at 1709 at this present time. So if I'm buying it at 1709 first thing tomorrow morning, 1709, I sell the 17s. The 17s are going for 33. 33. Okay? So what is 33 from a $17? Now, first off, clear that. $33 is my profit, right? Because that's what the 17 strike price. The strike price. So if I'm doing a stock option against this position, so if I'm buying Macy's at 1709, see the number? 1709. And if I sell it the right, someone to buy it from me anytime between tomorrow morning and Friday afternoon. A certain price by a certain date. The certain price is 17. The certain date is Friday. So whoever buys that option from me and pays me that 33 cents per share, okay, they can do whatever they want with that stock between between Tuesday morning when I sell it and Friday afternoon when it expires. Now, if the stock is below 17, well, I'm going to keep the stock and do it again next week. If it's above 17, I'll be back to cash on Monday. So I'm still collecting that 33 cents, but 33 cents is not all profit. Because if I'm paying $17.09 and I'm selling it for 17, well, I'm losing 9 cents. Well, that 9 cents has got to come out of the equation somewhere. So we take it out of the equation right here from the 33. So we're going to subtract the 9 cents. Now my profit is only 24 cents a share. 24 cents a share, that's like less than a quarter. But here's the thing. How much is each share costing me? So I'm going to divide that by 17. Okay, why not 1709? Well, because I already subtracted the 9 cents out of the equation. Okay, so divide it by 17, that's 1.41% for the week. Now, the question you always got to ask, always, do I like Macy's? Do I like Macy's at that point? Okay, do I like Macy's at 17? Is this a trade that I can see myself holding for a long period of time? Because you just might have to. Now, when I say that, a lot of people don't realize what do I mean. Well, when you buy a stock, okay, there's a 50-50 shot. 50% that's going to go down, 50% it's going to go up. Okay, it's going to go up, it's going to go down, either one. So every once in a while you'll buy a stock and it will go down and you have to hold it longer than you want to. Perfect example, this quarter so far, I had bought AEO, okay, American Eagle Outfitters, April 1st, and I still own it at this moment in time because every week it misses my strike price. But every week I continue to bring in a premium against it. Now, my price that I into it at is $23.65, but this week I sold the $22.50s, which is less than what I paid for it, but higher than where it is at the moment. And I only got 19 cents per share, which is less than 1%. So some of my trades make more than 1%, some of them make less than 1%. So every once in a while, you always got to keep in mind that you might have to hold on to something longer than you want. Now, I've been trading for over 20 years. The longest I've ever held anything was 9 months. Not 9 years, not 9 decades, 9 months. And that was Kimberly-Clark. And I didn't do it because I wanted to. I bought it, the stock dropped, floated around the bottom for a little bit, came back up, I got out, made profit. But in that 9-month period, I collected 3 dividends, okay? 3 dividends and almost 33 premiums, weekly premiums, 33 weekly premiums and 3 dividends on Kimberly-Clark. So I did profit off of it in the long run, but it kind of hurt when it went down. Kind of insulted me. Kohl's. Take a look at Kohl's also. Didn't we already take a look at Kohl's? Alright, so I do have Kohl's at 23.23, lovely, and I have a couple orders on Kohl's. Alright, great. At this current moment in time, Kohl's is at 21.10. 21.10. See, if I want to buy it, 21.10. If I want to sell the 21s, 51 cents, I lose 10 cents off the top. So I'm bringing in 41 cents. That's almost 2%. Okay, why do I do Kohl's at 2%? Well, number one, I like Kohl's. Okay, we all know that. If you've been following me and you've been looking at my trades, you've seen I've done Kohl's many, many times. Okay, so a year ago, Kohl's is at the high of the year, $29.75. She drops to the bottom at the middle of October at $17.83. So at $17.83 was the bottom, last 90 days. Here we go, first day I want to see the high, the low, where was it, where is it, blah, 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 all that kind of nice, neat, fun stuff. The last 30 days, right here. Okay, 30 days ago was the 30-day high. Check it out. 30-day high. She drops, pulls back, drops, pulls back, drops, finds the 30-day bottom right there on Wednesday. Wednesday of last week. Thursday was an up day. Friday was an up day. Today was an up day. Well, of course I was going to jump in today. I mean, that's an invitation and a half. 30-day top, 30-day bottom, 3 days to the upside. Why wouldn't I jump in? That's me. You guys can ask yourself that same question. What is the right position for me? All right, so I jumped in at 23.23. I sold off the, what the hell did I do? 23.23. I sold the 21.50s for 19 cents. Didn't quite get my 1% this week because I bought it back on May 28th. June 3rd, June 24th, July 9th. So I dollar cost averaged out 3 times on this thing. Holy cow. Imagine that. All right. That being said, next on the list. Next on the list. All right. Next on the list. What do we got? What do we got? Kyle. Hey there. Just interested in dividend only, not contracts. All right, Kyle, can't help you out with that. But Kyle, ask yourself a question. You're investing in dividends. They pay dividends every 90 days. That's one check every 90 days. And what's your return going to be on a dividend? Dividends are usually anywhere between 2 to 5% yield per year. Okay, I'm showing you how to get a safe, predictable, consistent 1% per week. And that, my friend, is over 50% per year. Okay, it's going to take a little bit more time than just dividend investing. Because dividend investing, you're buying the stock and you're just holding on to it for decades. Well, that's not what we do here. We go into it with the intention of holding it for decades. And then we sell a covered call against it coming into the dividend play. Because stocks have a tendency to go up just before the dividend. So if that's the case, I could do a weekly optionable stock every 7 days and get 1% every 7 days. So why wouldn't I want to do that? Okay, Flipper, you like Johnson & Johnson, huh? Flipper, Johnson & Johnson. Okay, 158.56. The 157.5 is going for 190. So we're losing $1.50. Yeah, the numbers aren't there. Sorry. Because at 158.56, the closest strike price is going to be the 157.5. I'm losing $1 right off the top. Lose $1 off of 191, you're walking away with 91 cents on a $158 stock. The interesting thing about big companies, I'm talking really big companies like Johnson & Johnson, what's the other one? Coca-Cola, Pepsi. I'm talking about the really big companies that are like over 100 years old. The premiums are not always the greatest in the world. So this premium here is less than 1%. So sorry, Flipper, Johnson & Johnson is going to be a no for me, only because the premiums are just not that great. Do you teach or have a class? Yes, I do, Sandro. Pacha Sariel. Is your strategy like JPQ? No. JEPI? Yeah, no. No on both of those. Now, the reason why no on both of those, number one, they're monthly options, okay? Means I can only do it 12 times a year. 12 times a year, what is that? 12 to 24%? Well, if you like 12 to 24%, hey, that's great. But I don't like JEPQ and I don't like JEPI. Now, here's the reason why. I'm not even going to go into the monthlies, but we're going to go directly to Yahoo Finance. JEPQ. Okay, the reason why I don't like JEPQ, okay, 8.77% yield. 8.77. Okay, I'm averaging 1% a week, and this one's paying 8.77. All right, that's JEPQ. JEPI. Okay, same thing, 7.34. Okay, so what you're doing is you're giving your money to a machine. Okay, ETF, electronically traded fund. And don't give me that crap, it's an exchange traded fund, because all the exchanges are electronic. Bunch of computers, that's all it is. So you're giving your money to a computer and it's paying you 7% per year. Fine, if it works for you, great. For me, it just doesn't work. Not only that, JEPI, monthly options, which means I can only do 12 a year. Doesn't work for me. What do I do for the other 40, yeah, no. Sorry, I just don't like it. Okay, I like weekly options because weekly options give me a chance to get 1% per week. This here, right now it's at 57.02. The 57 is going for 35 cents. You want me to say that again? 30, look, it's at 57.18. The 57 is going for 35 cents. And I've got to take that 35 cents and divide it into 3 weeks because the option doesn't expire for another 3 weeks. And I got to figure out where is this stock going to be in 3 weeks. Well, right now, look where it is. It's very close to a 30-day high. I'm not talking 3 or 4 or 5 days. You're talking 3 weeks. Where's it going to be in 3 weeks? Well, most likely in 3 weeks, she's going to go up and then she's going to come back down again. Why would I want to do that? I like weekly options. It's easier to find out where it's going to be in 3 to 5 days than it is to find out where it's going to be in 3 to 4 weeks. Big difference. So no, I don't like monthlies. They just don't pay the same. So if you're going to spend the time and effort to learn something, wouldn't you want to do something that gives you a better rate of return? 1% per week is 50% per year or more. When do you think of getting 1% on a put? Then if decline, you are okay. Flipper, I'm not 100% sure I understand what you're saying there. I'm going to read it again in a second because it doesn't make sense the way you've written it. What do you think of getting 1% on a put? Then if decline, you're okay. Well, that's just cash secured put. And if I'm going to do a cash secured put, I'm going to want more than 1%. Okay. ERM. Brian, the ticker ERM. Never heard of ERM. I heard EMR, but not ERM. ERM. Yeah, no options. That's going to be a no, Brian. Sorry. Starbucks supports genocide. Not for me, due to my feelings for humanity. But thanks anyway. Well, alrighty then. What do you think of UPS? UPS. UPS. Here we go. UPS had an interesting drop the other day. Well, let's take a look at it. Right now it's at 28.60. The top was 187.78. And the bottom is 125.34. All right. Last 30 days. Okay, 30 days ago we were at 136.64. Topped out on the 18th of July. We're talking about UPS. 30 days ago we opened up at 136.64. Topped off on the 18th of July at 148.15. 3 days later, we have a big drop from 145 all the way down to 125. That's a $20 drop. Now, a $20 drop on a $140 stock, that's close to 15%. Close. 10, 12, somewhere in that area. But anyway, that's a big drop. All right? So, day later, on the 24th, she bottoms out at the 30-day bottom. 1, 2, 3 days to the upside. Now, I'm not quite sure if we can consider today as an up day because it actually closed lower than it opened this morning, but it's still higher than the 30-day bottom. But good reason to take 1% cash from them. Wait, I like your way of thinking. He doesn't like Starbucks. There's nothing wrong with that. Okay? I don't get political when it comes to stocks. Joshua Renshaw, it's live. Okay, no idea what that question was, but okay, Joshua Renshaw. He gets to all the questions so far. You only voiced one opinion. Well, alrighty then. Thanks for that, Wade. I try to get to the questions as much as I can. Low power mode turned off. Okay, interesting. James, for Starbucks, if you already own the stock at 71, you can sell 78 strike price and collect a premium. Yeah, TikTok, we already talked about that. If I owned it at 71 and currently at 74, I would just sell it. I wouldn't even bother with the options. Okay? I'd sell it and I'd find something else to jump into. Premium, yep. I'm going to look at that. Don't. I like the paper trade in the afternoon when it's slow. Why I've done these ones. Okay. Should I quit my job? And do this full time? Oh, right on. Yeah, no, dude. I can't tell you what to do. Seriously, I have no idea who you are. I have no idea what you're looking to do. I have no idea what your skill level is. I have no idea what your risk factors are. Okay, I can't tell you to do anything. Okay, that's a question. I will share a story with you though. Okay. I'm not quite sure how you pronounce that name. I'm just going to call you Tron. All right, Tron. Here's the thing. At one point in time, we all got to retire. We all got to stop working because they're basically, well, working for someone else. Because when you retire, you still do work, but you do it for different reasons. I'll go to my mother's house and mow the lawn. But am I getting paid for that? No, I'm not. Okay, I'll go trim the hedges. I like doing those things, but I'm still got lots to do. But I don't punch a time clock anymore. I don't work for anyone anymore. I take whatever money I have, I invest it, and I get a safe, predictable, consistent 1% per week. That gives me a nice amount of money to live off of comfortably for me by myself. Okay? That being said, you have to decide how and when you want to retire. And there's 3 ways to retire. You ready for this? Some of you are going to find this humorous. Some of you are going to find it rather disturbing. Way number 1, it's called aging. Aging out. You're going to get to a point in life where you are too old to go to work. And your boss is going to say, hey, dude, you're just too freaking old, stay home. Granted, they can't say that anymore, but we all know that's going to happen. Number 2, you can do what they say, walk out. What do you mean by walk out? Well, walking out of your job, basically telling your job, you can take this job and shove it. I have enough money coming in from my investments. I don't need to work here. You can take this job and shove it. I ain't working here no more. Or number 3, you can toe tag out. Do you know what that means? That means you die on the job. And yeah, there are plenty of people doing it. But think about realistically, there's only 3 ways to quit working for someone else. You age out means you're too old to do it. You walk out, which means you have enough money in your retirement account to give you a steady income so you don't have to work. And number 3, you actually die on the job, and people do that. Okay, I'm going to start paper trading just to learn how to operate Thinkorswim. 2-turn Tina. Cool. 2-turn Tina. All right, not a problem. If you need any help with that, Tina, just log in here every night. Send me a DM with your number. I'll give you a call if you want me to walk you through how I set mine up. Now, Thinkorswim can be very intimidating because it's a lot of stuff on there. And there's about 80% of the stuff on Thinkorswim I don't even look at. I have no idea it even exists because I found a trading strategy that works for me until I find something that can improve my trading. Okay? I'm just going to leave it at this. There's an old saying, if it ain't broke, don't fix it. Okay, so I'm not going to touch it. If it ain't broke, don't fix it. It's making me a nice little return on a weekly basis, and I'm perfectly okay with it. All right. Adobe. I have no idea the ticker symbol for Adobe, which means I don't trade it, which means there's a reason why I don't trade it. Mara doesn't pay dividends. That's a no. RCW. Huh. Okay. Sheila. Was ARM one of those ones with no dividends that you make exceptions for? I don't think I even know who ARM is. ARM. ARM Holdings. To be totally honest with you, Sheila, I've never heard of them. Okay? So I've never done them before. Okay, Mike Junko. Okay, we looked at Dell 3 times. 3 times we looked at Dell. We even looked at Dell this morning. So that's 4 times you've seen Dell today. Nothing is really going to change about Dell. But I'll take a look at it again for you just to entertain you. But Sheila, sorry, I have no idea who ARM is, and I've never traded them before. So my assumption is that they don't have dividends. ARM. Loading the chart. Yeah, they have no dividends either. Okay, it's right here. Forward dividend and yield, none. EX date, none. There's no dividends there. Why would I look at them? Okay, so Michael, you want to look at Dell again for the third time tonight? Dell. I'm just going to go the last 30 days, Mike. All right? So, 30 days ago, we opened up at 137.48. A week later, we're at the 30-day high, and that was the 9th of July. Okay, the 9th of July is the 30-day high. From there, she drops, retrace, drops, finds the 30-day bottom on Thursday, the 25th. Friday was an up day, and today, as soon as we had opened up this morning, we were looking at it, we were eyeballing it, and it didn't seem to want to go any higher. In fact, I remember this morning at 9:30, 9:31, 9:32, we started seeing Dell going down, 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 and I thought to myself, I might as well wait and see what happens. So, I didn't buy any more Dell, because I already own some Dell, and I have Dell at 128, and currently it's at 111. So this is one of those opportunities where I tell you guys, when you buy a stock, it can go down. So when I bought Dell, I bought it on the 22nd, which was right about here. Okay? And then she just dropped. Now we're down here at 111. Did I sell it? Did I get rid of it? Did I panic? No, I don't mind holding Dell. Now, originally, okay, I got a nice, I think it was a 2 or 3% last week on the premium for Dell. This week, I sold the 117s for 165. That's still over 1%. But somebody can buy the stock from me anywhere between today, which was this morning, and Friday at 117. But why would they want to buy it at 117 when it's currently at 111? Okay, more than likely they're not going to buy it. So I just collect that premium, hold on to it, and see what happens on Friday. Okay, Mike, I'm kind of hoping you don't ask for Dell again. You asked for it 3 times tonight. All right, Mike, I did AAP today, sold 61 for 142. Cool. I remember I did AAP today also. Advanced Auto Parts. Okay, so let's take a look at Advanced Auto Parts. 61.20. So the 61 is going for $1.30. You take out that 20 cents, right? See, 61.20, and I sell it at 61. Well, if I take out that 20 cents, well, I'm only walking away with 119. 119 on a $60 stock. Well, let's take a look. Clear 119 divided by 61 bucks. That comes to a grand total of 1.95%. And you're wondering why I did it today? Uh-oh. So we're looking at Advanced Auto Parts, AAP. Great. Well, 61.20 is the current price. The premium, 61, is going for 139. Well, you take the 20 cents off that you're losing. You walk away with 119. 119 is 1.95% for the week. So here's the big question you need to ask yourself, and you always got to ask this question before you buy anything. Okay, question number 1. Never buy something you don't want to hold long term. I got no problems whatsoever with Advanced Auto Parts. Look, the high's up here at almost 88 bucks. The bottom's down here at 48 bucks. So from 48 to 88, that's almost doubled in price in a year. Well, great. There's going to be profit taking. And there was. Okay, the bottom of the year is 48. Top of the year is 88. That's almost doubled in price. So she comes down. Last 30 days, here we are, right here. Last 30 days ago, 62.58. Great. Bottomed out on the 9th at 57.83. All right, from there, a week later, she's at the high at 64.92. Now, from 57.79 to 65, so 57 to 75, 7, 8. It's almost an $8 move on a $64 stock. Whoa, that's about 15%. Anytime I see a 10% or higher, yeah, I'm jumping up and taking profits. Because guess what? Nobody ever went broke taking profits. And it ain't a profit until you take it. So if you buy your stock down here at 58, great. It's cheap. Let's buy it at 58. Great. Yay. Then it goes up to 60, 64, and you don't sell. Well, it's your own damn fault. Okay? If it's a profit, well, take the damn profit and go on to the next one. I get over 300 companies I look at consistently. So I'm following 300 of them. Why? Because each one of them has consistently increased their dividends for more than 20 consecutive years. That means they're continuously profitable. Why would you invest your money into a company that's not profitable? Okay, at least not profitable continuously. Now you've got to decide. Now I like 20 years of increased dividends. Now there are companies that have 10, 15 years of increased dividends. And they may be great companies. All right, fine. But then instead of looking at 300 companies, now I'm looking at 600. Well, that's a little bit much. It's hard enough to keep track of 300, let alone 600. All right, let's keep on going. Let's go. Oh, 86 questions. Holy cow. Let's operate. Q, Q, Q. How about no, no, no? The Qs do not have dividends, I don't think. Well, number one, it's out of my price range. Now, I told you guys I like to stick in stocks that under 250 bucks because I really don't have as much money as you think I have. If you think I can buy 1,000 shares at $461 a share, yeah, you got the wrong dude. Yeah, so the Qs, I'm pretty sure they don't pay dividends. Oh, wow. I gotta maintain my composure here for a second because I'm not sure I'm seeing this correctly. All right. Now, can somebody, anybody, other than Let's Operate, explain to me why anybody would want to invest in the Qs, especially when the Qs are offering, am I reading that right? 0.6%. That's just a little bit over 0.5%. We have high yield savings accounts that makes more than that. So why would you put your money into something that you could lose your money at because it's it's a high volatility type scenario going on, and it's only giving you a yield of 0.6%. 0.6. I'm a little dumbfounded. Okay. Now I want to look at dividends only. The maximum amount of dividends on the Qs. This is going to go back way back when. Okay, back to 2003. Okay, as far as it goes back. It goes 38 to 10 to 3 to 2 to 5 to 3 to 4 to 3 to 5 to 7 to 9 to 11 to 8 12 to 10 16 to 5. Are you shitting me? To 11 to 14 to 20 to 30 37 to 16 to 22. There's no consistency here whatsoever. Okay? They're consistently going up and going down, going up and going down. What does that tell me? What it tells me is they're not consistently profitable every year. And it's not even a company. All right. I missed some questions. How do you think about the delta of the options you sell? Looper Liam. I wonder if you know about the Great American Loop. That's what came up with Looper Liam. I have no idea. You didn't look at it. Choose your hard. Are you trying to tell me I didn't take a look at that one that didn't have dividends? Why would I? You stated that you don't have to worry about taxable gains in an account you have. Is it a Roth? A Minty Fresh. Well, let me see if I can answer this question for you in a manner which you'll understand. If you have your trading account in a corporate situation, that means it's a corporate account. Okay, corporation owns it. Now, anytime the corporation makes money, yeah, that's a taxable event. But if the corporation consistently loses money, let's say the corporation has to, buy a new facility, buy a new vehicle, pay travel expenses for all the board members, pay, any losses you have in one company offsets the profits of another enterprise. So if I'm making money here and I'm losing money here, they kind of offset each other. Or you can always, write to the IRS and say, hey, I would cordially like to cancel my subscription if you don't mind. So you really need to talk to a tax strategist. Okay, it is your responsibility to pay the least amount of taxes legally, and for that, you need to talk to a tax strategist or a tax planner. Seth, IVP doesn't pay dividends, so why were we looking at it? Okay, choose your heart. You didn't even look at it. It's probably a reason why I didn't look at it. How do you think about the delta? I don't think about the delta. Okay. The reason why I don't look at the delta is because you're missing the 5 criteria. The 5 criteria for this particular trading strategy that was created for a 9-year-old little girl back in 2008. It had to be simple. So when I start explaining the Black-Scholes pricing methods for options, about the delta, the vega, the theta, and all that other crap that goes along with it, it's no longer simple. Okay? So no, I don't pay attention to the delta on the options that I sell. Because the only thing I'm concerned about with the options that I sell is, what am I paying for the stock? What am I selling the options for? And is that more than 1%? Why do I care about the delta? Explain to me in a manner where what I just said, if I'm buying it for this price, selling it at this price, and collecting this premium, which is over 1%, why do I care about the delta? The delta is going to do nothing more than complicate the scenario. More steps, more questions, and trying to get a 9-year-old to understand the Black-Scholes pricing methodology. Yeah, no. Sorry. I don't pay attention to the delta at all. I think I just wanted to get your opinion. Yeah, choose your heart. I get that. But what the hell were we talking about? Choose your heart. You want my opinion? Choose your heart. Where is it? Well, I can't seem to find it. Choose your heart. That would be an interesting way. If there's a way to find out all the questions asked by one person. That way I'd be able... Math isn't mathing. I have no idea what you're talking about. 86 ideas. Just Google the company and the dividend date. Yep. Infinite. Ryan, you can Google each individually, or you can create a list inside Thinkorswim. Correct. 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 Okay. So, choose your heart. I'm not 100% sure which one you want me to take a look at. Send it to me again. I'll take a look at it. I'll give you my opinion. It's not going to change anything. Okay. If it doesn't pay dividends and doesn't have weekly options, it's automatically going to be a no. So we're going to look at it and we're going to do nothing but waste time, in my humble opinion. For why would I want to do that? Okay. Can you talk about IVP and what to do with it in the next days? Seth, you want me to take a look at IVP, a company I've never heard of. Big fat no. It has no options. It's below $6, and that looks absolutely atrocious. A good opportunity if it was a good, decent company, and they had 20 years of increased dividends, or any dividends at all. Let's take a look and see if they even have any dividends. IVP. It has no dividends whatsoever. So, if it has no dividends, how do I know if they're profitable? Now I have to go in and look at the earnings reports and see what they're doing year over year over year. It is so much easier, right? Think of this for a second. To figure out if they're profitable or not, you have to read through the earnings reports and the quarterly report. Now I'm going to have to do that for every single year because they don't have dividends. Now dividends, it's simple. If 2000, they paid 13 cents. Okay, great. 2001, they paid 14 cents. Well, that's higher. 2002, they paid 15 cents. Well, that's higher again. 2004, higher, 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 higher. With one number, I can tell whether or not the company is profitable and continuously profitable. Because if they're continuously profitable, they're continuously increasing the amount of the profit that they share with the shareholders. Oh, look at this. Marathon Mom wants to take a look at Target. That's a good one. Target, Dividend King. Consistently increasing their dividends for more than 50 consecutive years. So let's take a gander at it. 146.82. The 146s are going for 235. Well, that's over 1%. Even after you do subtract that 82 cents off of that. Okay. A year ago, 135.65. A year ago is when I bought it. I bought it in July of last year at 135. And as you see here, I bought it here at 135. It dropped all the way down to 102. I still had it at 135, and I own it. And then all this here, I still owned it at 135. Here is where it bit me in the ass. It jumped $16 overnight, and I lost. I think it was $12 to $15,000. I think it was $12 or $15,000 one day because the stock jumped up 16 bucks. I was at the short end of the stick. Someone made money off of that, and it wasn't me. All right. So here's where we are at the current moment in time. Last 30 days. Here we go. 30 days ago, we opened up at 148.34. The 30-day bottom was on the 10th. She shoots up from 143.41 to 156. So that's $13 on a 140. That's 8%. It's not quite 10%, but it's 8%. From there, she drops, finds a bottom here on the 24th, went back up, bottom down again. Yeah, so it appears, it doesn't mean it's right or wrong, it just appears that as she's coming down, she hasn't quite found the new 30-day bottom, or the new bottom. Because we have a bottom here, 1 day, 2 days to the upside, she pulls back again. Yeah, no, so that's not your bottom right here. Okay, here's a new bottom here, and she could drop again tomorrow. We don't know. I like 2 days to the upside before I can isolate whether or not it's a bottom or not. So Seth, IVP, yeah, it's a big fat no, dude, sorry. Alright, Arrow, it's what? GD, it is. I have no idea what you guys are talking about. Can you just make 1% on a put? If it drops, you're okay. A flipper, yeah, you can. Nothing wrong with it all. Chevrolet, thank you for checking that out for me. Minty Fresh, you stated you don't have to worry about taxable accounts. Okay, yeah, I told you, you need Minty Fresh, you got to talk to a tax strategist. All right, choose your heart. You didn't look at it. I told you if it doesn't meet my parameters, it's nothing but a waste of time. But if you send it to me again, maybe I'll take a look at it. How do you think about the Delta? I don't think about the Delta. Okay, thank you. Just wanted your opinion. Well, I appreciate the fact your heart, choose your heart. I appreciate that you want my opinion, but my opinion is coming from a point of view where either it is or it isn't. So I come from the generation where it is what it is. Okay, so it's either, holy shit, Teddy DeCroach, how are you doing, dude? Way over here on Facebook. I went to school with Teddy. Way to go, Teddy. I dated his sister for a while. Rusty. We used to call her Rusty. All right, Teddy. Good to see you there, man. All right, so as I'm saying, right, my humble opinion, if it doesn't fit in my parameters, I'm window shopping. I'm looking at something I'm never going to buy. Why am I looking at it? It's never going to fit in my parameters. Okay, if it's not consistently increasing its dividend, even if it doesn't have a dividend, why am I looking at it? If it doesn't have monthly option or weekly options, why am I looking at it? Now, one thing I prize more than anything else is my personal time. So if I'm looking at something that's a total waste of my time, well, why am I doing it? My opinion is it's a waste of my time to look at it. That's my opinion. And my opinion also is, what the hell are you thinking buying something that's not solid? And what do I mean by solid? Well, if a company is continuously profitable, they're going to increase their dividends because that's the share that goes to the investors. You and me, we're the investors. When we buy and sell stocks, we become the investors. Okay, the very first dividend stock was specifically They went door to door saying, hey, we want you to invest in this company and we are going to share the profits with you. If we are profitable, we are going to share those profits. Great. Well, if the company's not sharing their profits, why the hell do I want to invest in them? I'm past the point of capital appreciation. I don't want to buy something, wait 5 to 10 years to cash it out. No. Okay, I want weekly cash flow because I have bills that I have bills that come due every month. Okay, and they got to be paid. Well, that money's got to come from somewhere. Okay, I'm not going to take money out of my savings account or my investment account just to pay bills if I don't have something replacing it. I could go back to work. I have no desire to. I'm 60 years old. I prefer to hang out with my kids and give them a hard time and inconvenience my freaking kids. Because why? Because they inconvenienced me growing up. Daddy, can I have this? Daddy, can I have that? And so nowadays, like, Dad, did you eat my leftover spaghetti? Yes, I did. Dad, did you leave the lights on? Yeah, it kind of sucks, doesn't it? Payback's a bitch. Anyway, I'm having fun inconveniencing my children. All right, 86. He doesn't look at it. He usually does closest strike price as long as you get him at 1%. 86. Also, I will go deeper in the money as long as it is a safer trade. Because my number one priority is safety first. Okay, I'm looking for the 1%, but I want it safely, simply, and predictably. Okay, let's keep on going. Marathon Mom, do you use PE when deciding if a stock is a good stock to buy? No, I don't. Now, the reason why I don't, it's a good question, by the way. Okay, because a lot of people like the PE ratios. Okay, fine, what does it mean? Well, it doesn't really mean anything other than the fact that it measures what it measures. What I'm looking for, and the only thing I'm looking for, is a safe, profitable, well-run company. That's it, safe, well-run company. So if a company is consistently increasing their dividends, which is I know I keep repeating the same thing over and over again, but sometimes I think you guys don't quite understand it. Okay, when I say it's got to be simple, safe, predictable, and consistent, once you figure out what companies are consistently increasing their dividends, so you get a company that's increasing their dividends for 20 consecutive years, well, you can figure out some details right there. Well, number one, the company's over 20 years old. Most companies fold in the first 3 to 5 years. It's like 1 in 100 will make it to 5 years. 1 in 1,000 will make it to 10. Well, how many think it's going to take to get to 20 years? And then 20 years of consistently being profitable. Profitable enough that their profits they share with their dividend, with their shareholders. That's you and me, the buyers and sellers. Okay, if they're continuously increasing that, well, that's what I'm looking for. PE ratio's got nothing to do with that. Either the company is profitable or they're not. They're going to increase their dividend or they ain't. I'll give you a perfect example. A couple of perfect examples. You ready? Yum Brands, Y-U-M. Yum Brands was a dividend king. Okay, now to be a dividend king, you have to increase your dividends to your shareholders every single year. Every single year for 5 decades. Now, Yum Brands was a dividend king. And then, lo and behold, they cut the dividends, they got tossed off the list. Well, they are currently on the, I think the Aristocrats list, but they're up to 25 years. Okay, but it took them 25 years to get back onto a halfway decent list. Now, let's take a look at 3M. 3M has been in business for over 100 years. Okay, they have increased their dividends to their shareholders for 67 years consecutively. 67. Kennedy was in the office when they were paying dividends and increasing them. Okay, then this year, just this year, the CEO cut the dividends. Now they are off the Dividend Kings list. I still trade them just because the CEO doesn't have foresight to say, you know what, let's get the money from somewhere to pay off the shareholders so we keep the status of being a dividend king. No, he didn't do that. He said, let's cut the dividends. Let's start back at zero and take another 50 years to get back to the Dividend Kings list. The company's over 100 years old. Why the hell would you? Don't get me started. But yeah, I don't pay attention to PE rates. There's a lot of stuff I don't pay attention to because in my humble opinion, it's got nothing to do with what I'm doing. Okay? I want a good profitable company. How do you figure that out? The quickest way to figure it out, Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders. Okay, those 4 lists right there will give you over 300 companies. that consistently increased their dividends to the shareholders for 25 years or 20 years or more. That's my major. That's my major parameter that I'm searching for. And then weekly options. Between those two, that's over 300 different companies. Great. Bob Shenanigans, could you go into more detail on what you bought this week? I think I did this 4 times already, Bob. This week, Kohl's, MPW, Walgreens. Siri. Did I buy Siri this week or was that last week? Okay. Marathon. Ford. Whoops. Oh, Advanced Auto Parts, Dell, and Starbucks. I think I only bought 4 companies this year. I mean, this week. Yeah, today. That'd be today. All my money spent today. I think it's like 150, 160,000 I spent today. Something like that. I don't know. Barry Slot. Good evening. I'm late, but I like your content. Well, Barry, you know what? It is actually being recorded. See this screen right here? This screen and basically what you're seeing here is both being recorded on YouTube. So if you want to take a look at what I said today, yesterday, day before, it's all saved on YouTube under the 10-Minute Trader. Okay? Keep going. Andrew, we looked at O twice tonight, and O has been a no. First time somebody brought it up to me 3 or 4 months ago. It was a no last month. It was a no this week. It was a no next week. And it's going to be a no forever until they decide to go to weekly options. And they get their dividends in order. Because right now the dividends are all staggered, not consistently increasing. So it tells me, what does it tell me? Okay, if a company, you know what? Let's bring it up so I can give you a better idea of what I'm saying. All right. Okay, so let's take a look here. July 2024, all the way back to February 2023. From February 2023 to July of this year, they haven't increased the dividends at all. Okay, 2022, it was 25 cents. 2021, 23. Okay, and it was 23 for a while, for a couple years. Then it was 22, then it was 21. Okay, okay, so they are increasing, but they're not increasing consistently every single year. They're staggering it. Okay, they'll go 8 months, and then they'll go 14 months. Okay, so here, 2012, 1, 2, 3, 4, 5 payments at 15. Then a bunch of payments at 14. And it was 14. Holy cow. Okay, here we go. Okay, August 30th, 2012 is when they went from 14 to 15. Now, how long were they at 14? June 2012. Okay, June 2011. That's 1 whole year. June 2010, that's 2 whole years. June 2009, that's 3 whole years. 08, okay. So from 08 to whatever, it was 4 years they were at 14 cents a share, which means they didn't increase it at all. Which means, were they profitable then, or were they not? Now, if you're going from 13 cents a share to 14 cents a share, great, well, you're profitable. How long is it going to take for you to be continuously profitable? So if you're not continuously profitable, well, you don't increase your dividends. And for 3 years, they didn't increase their dividends at all. So what does that tell me? To me, that says they're not continuously profitable. So why would I want to put my money there? And worse than that, okay, what is O paying as a yield? Okay, if I'm investing my money in O, they're paying me 5.42%. 5.42. They're not consistently profitable because they're not consistently increasing their profits to the shareholders. Okay? So what does that mean? Well, point blank, it means no. Number one, it's a monthly. I don't like monthlies. The money is just not there. They don't pay the same. That's one. Two, the dividends aren't consistently increasing, which means they're not consistently profitable. If they were, they would they would share their profits a little bit more generously, which means they would continuously increase. Reason number three is the yield. Why would I put my money into a company that only pays 5.42%? I would just assume put it into a government bond. They're paying over 5% with no risk. This, at least you have risk at it. All right, and I don't even know that. I can't even ask that question because I don't know it. I was going to say, are the yields on government bonds tax free? I don't know. Are they? Doesn't the tax for selling within a year impact your total gains? Marathon Mom. Okay, anytime you want to talk about taxes, really, honestly, 100%, you need to talk to a tax strategist. If you are investing and you are making money and you are paying taxes, someone is not telling you something. Someone is lying to you. I did 9 covered calls this morning. Paper account. Dennis, cool beans. Let us know by the end of the week how it worked out for you. Because that's good. You do 9 covered calls on a paper trading account. Great. Let's see how it works out. Do it again next week. Do it again the week after. As soon as you get consistent enough where you feel you are ready to put real money into it, do it when you feel you're ready. Don't rush. Stock market has been around for 400 years. 400 years. It ain't going anywhere. They first introduced options in 1973. Well, cool. They introduced, I think, I don't even know when they introduced weeklies. Yeah, so anyway, Marathon Mom, you really need to talk to a tax strategist. Anytime it comes to taxes, if you're paying taxes, someone's lying to you somewhere. You need a tax strategist or tax planner so that you can legally pay little to no taxes whatsoever. Arrow! So, when you're held onto for 9 months, and when you sold it, was it close to your strike price? Well, of course it was close to my strike price. Okay, Arrow, remember this. Rule number 1, never buy something you're not willing to hold on to long term. I bought PPG, I held off for 6 months. Target, I held off for 6 months. Kimberly-Clark, I held off for 9 months. Okay, number 1, never buy something you don't want to hold long term. Number 2, never sell at a loss. Yeah, the stock dropped. I was still collecting premiums. She came back up, and I finally sold it for a profit. That answers your question. Okay? Never buy something you don't want to hold long term. Never sell at a loss. Make sure there's plenty dividends. Me, I like 20 years of increased dividends. 4, make sure there's weekly options. I don't do this monthly option crap because monthly options just don't pay the same amount as weeklies. Weeklies can get me 50% or more per year. Monthlies just can't do it. Sorry, if it's a monthly, I don't want to look at it. If it has no dividends, I don't want to look at it. I get 300 companies that I look at on a constant basis. I have a good feel for where they are. I have a good feel for where they're going. Okay? I like Target. Target is on my list, but at this moment, she's down here, she shoots up, she pulls back, and she's still here. Yeah, it's not thrilling me at this moment in time. Alright, so that's Target. Let's see if we can move on to something else. We have 31 more questions. Holy cow, we only got a few minutes left. You guys are making this go by quickly. Is there a good $2 stock with dividends? Ooh, choose your heart. Let's come over here, get rid of this, and we'll look at watch list. Okay, watch list, the best I can come up with is Siri at 354 or Nokia at 384. They get GNW at 674. Let's go to another. MPW is $5. Yeah, there's not very many of them that are that cheap. Dividend contenders. Yeah, MPW. Oh, wait a second. Pets. It's $4. Yeah, there's not a whole heck of a lot that cheap. Sorry. Let's get rid of that. Open this back up, my quick chart. All right, see how many more questions. We got 32 more questions. Holy cow. MGA, is that a no on div? Grillbit, MGA. I don't know if I ever heard of MGA. MGA. Magna International. Yeah, that's going to be a no, dude. It's a monthly. Okay, the numbers just don't work on monthlies. Eric, what kind of trader would you say you are, as in swing or short? Let's call it a weekly trader, okay? Because I trade on a weekly basis. Great job. Eric, term, never heard of it. TERM. Yeah, no options. That's going to be a no. Sorry, dude. HAS. Really? Is that Hasbro? Hasbro. Cool beans. No. No. It's monthly. Monthlies just don't pay. I'm at a loss why some of you guys continuously give me stuff that has monthly options or no dividends. Shikhar Gupta, AMD. AMD? Micro divisions. Doesn't that like have no dividends? I'm pretty sure. AMD, Advanced Micro Divisions. Yeah, they have no dividends, dude. Sorry. GRPN Groupon, really? Come on, that's not, it doesn't have 20 years of increased dividends. That much I do know. GRPN. Okay, it's got your weekly options. Cool. It's going to be a no because it's at the high of the year, and I don't like high of the year. It's not a game I like to play. Okay, I don't ever buy at the high of the year. But let's take a fun of it. Take a look at GRPN. Yeah, they don't have any dividends either. So Groupon is a no. AMD is a no. What do you think about QQQ? Oh, Max Everett, you missed my QQQ a little earlier. QQQ is a no, no, no. The reason why it's a no, and they do pay dividends, okay, they're halfway decent. Okay, they're not consistently increasing, so it's hard to tell whether they're continuously profitable. A couple of reasons why it's a no. Reason number one, it's out of my price range. Okay, QQQ. Out of my price range. Okay, but you know what's worse on the Qs? You're gonna be very disappointed when you see this. All right, you ready for this? Max Everett 76. Okay, Invesco QQQ Trust. The yield, which means you're dumping all your money into this. They're giving you weekly dividends, monthly dividends. Great, you're happy, wonderful. What's your rate of return on your invested dollar? 0.6. Yep, you heard me right, 0.6, not even 1 full point. And that's not a week or a month, that's for the whole year. Now, I'm showing you how to get a safe, predictable, consistent 1% per week, yet you want to invest your money into a company or into a stock that gives you a little bit over 0.5% for the year. Yeah, sorry, dude. Kind of losing respect for you on that one. Hell no. Awesome! I caught you tonight. Hey, Bubbles, I'm here every single night. Okay, so since January 2nd, I've been on live every single night for 2 to 2.5 hours. Every single night. I only missed 2 nights. Okay? I had to go. I was sick as a dog one night. Ugh, that just wasn't happening. I had to take someone to the hospital the next night. Okay, so yeah. I'm here every single night, 9 p.m. until 11:30, which it's past 11:30. So let me finish up with these questions. No more stock talk. We're just going to go to questions, and that's going to be it. How many years trading? Over 20. Ooh, you want to see something really cool? I just found this today. I was looking around for it. Check it out. Check this out right here. January 20th, 2012. And here's a little First line is our options position value. Second line is the current profit loss. 8.8 ROI for 1 week of trading. This was in 2012. Those are the numbers from 2012. There's some more January 2012. There's a whole bunch of these somewhere. Past stock trades. Come on. Oh, those are the option trades. Okay, yes, I was doing stocks and options back then. Take a look at this. In 2011, 39% for the year, 9.75% per month. 2012 was 105%, or 8.7% for the year, for the month. And then what was this one? 2013. Cool. But look, here's all the trades right here. 2013, March 2013, February 2013, November 2012. Oh yeah, I've been doing this for quite a while. Week 34 this year, 73%, or an average of 2.2% per week. Running total from August 2011, or week 51, total 142. Cool. Average of 2.83%. Wow, and that was 2012. I knew I had this somewhere. I'm just trying to figure out how do I move it from this web page, which doesn't exist anymore, because that was one of my earlier ones. How do I learn about taking your classes? Well, Barry, you can go right to the 10-Minute Trader, which is up in the bio, top left right there, where it says the Dividend Stock Talk. Okay, you click on that, my little pretty face there in the top left corner, and you hit that, and that will take you to an email where you can send me a message, or it will send you to the10minutetrader.com. Now, if you do research on Google, the10minutetrader.com, find out how long I've owned this. It's well over close to 20 years. So the online trading is right here. Very first page, it says Trading Online Live, or you can slide down a little bit more about us. If you're looking to strike it rich overnight, this ain't it. My main focus is a simple, safe, predictable, and consistent 1% per week. That's over 50% per year. Now, I like this right here. Investing your own money shouldn't be difficult. Stop making it more complicated than it needs to be. This current trading strategy was created for a 9-year-old. If you can't figure it out, I can't help you out. Okay, but the second little green dot right there, live trading. Join our live morning trading group. I jump on at 9 a.m. and I think we're on 2 hours this morning. But I jump on at 9 a.m. just before the market opens, and on Friday we're on at 3. So Monday, Tuesday, Wednesday, Thursday, 9 a.m. Friday, 3 p.m. because we want to see what happens before the close of the day. That's that. Let's go back to some more questions. Okay, Barry, I have 49 questions. Hold it down. I have 5 funded accounts. How can I get paid consistently? Peter, DM me with your number. I'll give you a buzz. How about making a video on setting up your Thinkorswim? That's an interesting question. YouTube. We're going to go to YouTube, right? Videos. We're going to go to the oldest. Dividend investing, blah, 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 blah. Dividend investing, trading with dividends. 10 reasons why, no. No. Simplified stock reading, getting familiar. Well, here you go, right here. Getting familiar with Thinkorswim. 10 years ago I did that video. Simplified stock chart reading, 10 years ago. Stock chart pattern recognition, 10 years ago. Understanding stock orders, 10 years ago. Receive 10 to 20 checks per month like clockwork, again, 10 years ago. Where to find great stocks, 10 years ago. 10 to 20 checks per month, 10 years ago. Where to find dividend stocks, 10 years. These are videos I've done 10 years ago. But what do I want to see? It's a video right here. Dividends on Steroids with JC Lynn. How to open a trading account with JC Lynn, another video. Trading with dividends. Setting up your trading account, right there. That's all part of the members page. Live trading, okay. Making your first trade. Wow. Simplified chart reading. Maintaining and correcting a position. Yeah, there's lots of interesting stuff there. But that's like stuff is 10, 15 years ago that I did. Why different accounts versus just two? Margin and cash. Well, Richard Bruner, I do trade for other people too. Okay. Friends and family. Okay. Yeah, so I have 6 different accounts and one's for my grandson. You always say there's 300 companies that pay dividends. You just bought 100 shares of all. Oh my goodness. Wildcat Sam, I really can't believe you asked that question. You always say there's 300 different companies that pay dividends. What if you just bought 100 shares of all? Well, if I bought 100 shares of all, where would I collect the weekly cash flow? Okay, just buying a stock doesn't guarantee you a paycheck on a weekly basis. So if I buy AT&T at $18.90, where's my cash flow coming from? Okay, it pays a dividend every 90 days. Okay, so let's say hypothetically speaking, I have $100,000. Now $100,000, I get 1% trading $100,000 every single week. I buy $100,000 of 5 companies, great, I get 1% a week. Fine, wonderful. Next week, I'll buy another 4 or 5 more companies. I'll get my 1%. Great. Next week, I'll buy another 4 or 5 companies. I'll continue to do that week after week after week. Now, there's only 13 weeks in a quarter. So if I'm continuously buying and selling companies every single week, week number 1, week number 2, week number 3, so on and so forth. Okay, by the time I get to week number 13, the list starts over again, and I go back to week number 1. And it's the same stocks over and over again. So if I bought all 300 companies, that's taking my 100,000, dumping it into all these companies. I'm going to get what, 3 to 5% per year? Yeah, that's not enough to live off of, dude. It's not. And you're not the first person to ask that question. Okay? So anytime you buy a stock and just hold on to it, you're getting the dividend and only the dividend. And the dividend is usually anywhere between 2 to 5% for the year. Okay? So I have no problem taking 15 minutes a day out of my time buying a couple of good companies. Because what I do is I take a look at the calendar. Great, what's on my list? Well, Abbott Labs. What the hell company is this one? Let's go to ones I know off the top of my head. Okay, MasterCard, Visa, General Motors, AT&T, General Electric. Great, that's all I'm looking at this week. Next week, AbbVie, Abbott Labs, Hormel, PNC, Procter & Gamble. That's it. The week after that, Bank Mellon, Caterpillar, Lowe's, Pfizer. Okay, so I'll get 1% per week as opposed to the 3 to 5% per year. Yeah, sorry, it just doesn't work for me. 55 more questions. I really want to learn how to do this, and I learned watching YouTube videos. What's your advice? Lorene Store. My advice was continue to do it. Get a paper trading account. Hey, Darzik, how's it going? New book coming out. Oh, damn it. What's the holdup? Procrastination. Shiny objects. I have ADD in the baddest way. I finished writing that book 6 months ago. Why don't I have it up online yet? I honestly can't give you an answer for that one. Send me how to get a hold of you on taking your class. I need to wake up early, going to bed now. Barry Slot. Let's see if I can do this. Reply. You can contact me right here. There you go, Barry. I just sent you a personal message. So hypothetically speaking, you should be able to reply to that with your phone number, and I can give you a call. How's that? That was pretty good. All right, so I think that's it. That's all the questions. Woohoo! Done! Uh-oh. No, not tax-free. Barry, I have no idea what you mean by no, not tax-free. Okay, 'cause I didn't quite get what yes you were talking about. Real estate flipper. Where can you go to find a list of companies that continue raising dividends for over 20 years? All right. Real estate flipper. I think I've said this like 4 or 5 times every single night. You ready? Here we go. Hey, Sherry, how are you tonight? All right, flipper, you ready? Go to Google. Dividend Kings List 2024. 54 companies that have increased their dividends for 50 consecutive years. Google Dividend Aristocrats List 2024. 67 companies that have increased their dividends for 25 years or more. Google Dividend Champions List 2024. 150 companies that have increased their dividends for 25 consecutive years. Google search Dividend Contenders List 2024. 300 companies that have increased their dividends between 10 years and 24 years. It's me! Just signing in over here. Sorry, dude, I'm just getting ready to sign out. I'm here from 9 until 11:30, and it is 11:44. I'm about to turn into a pumpkin. I think I'm done with all these questions. SPG, Minty Fresh, can hit me up with that tomorrow. Barry, I have no idea what you're talking about. No, not tax-free. Okay, you have to figure out where and how to get in contact with a tax strategist or tax planner to figure out how you can pay 0 taxes legally. Gratitude challenge with Habibi. How do you trade weekly options without losing? Carefully. To be 100% honest with you, I did lose twice this year. Okay? I had 2 losses this year. I'm interested in the weekly. Alright, well, gratitude challenge. Send me a text message. DM me, I'll give you a buzz. DM me with your phone number, I'll call you and we'll talk about it. If the annual dividend yields are below 4%, do you look at them? Well, yeah. A flipper, the only thing I'm interested in, I could care less about the yields. Really, honestly, could care less about what the dividend yield is. My main concern is consistent increase in dividend payments. It doesn't sound like much, but it actually is huge, because if they consistently go higher and higher on the profits that they give to the shareholders, that means they're continuously profitable. Okay, if they're not profitable, they're not going to increase their dividends. It's actually that plain and simple. Choose your hard. Good night and thank you for your time. You're welcome, sir. Thank you, Leon Lyon. Cool beans. Can't sell covered calls on SoFi I bought at 9. Well, then I'll get rid of SoFi and find something that actually you can work with. How C? I like C. How can I join the morning live? Mighty Mo, the morning live, you can join that right through here, which is, hold that thought, homepage, the 10-minute trader. Hypothetically speaking, the top left corner, you should see a little picture of my face, and it says Dividend Stock Talk. You click on that, and that will bring you to a little envelope, which goes to my email. That's how you DM me, or we'll go to the 10-minute trader, which is one of my websites. Okay, the 10-minute trader. Okay, and then right here, there's 2 places. Right, the very first on the landing page is right there. Trading live online. You click on that, or you can slide down here where it says live trading. Join our morning group. and that will bring you to my Patreon, which says Dividend Stock Talk. And look, there's a picture of me again, right there. All right, all that being said, we're way past time. I think we're done and over with. Minty Fresh, have a good night. Anyway, anything else on this? What's your method for trading? Ooh, buying dividend stocks and selling covered calls against them. James, can you take a look at my trades in the morning? TikTok, yes I can. Is it easy to lose if you're new at this? Okay, what I'm going to tell you, if you're new at this, do not put any real money into it until you understand what you're doing. Come back over and over again. I've already committed to be here for the whole year. Now, I've been here live every single night since January 1st, January 2nd. Okay, I've only missed 2 nights. All right, I will be here every single night until the end of the year. At that time, I'll decide whether I want to continue doing it. But I've already made the commitment to do it. All right, and I like to think that I'm a man of my word. So I'll be back here tomorrow night, night after, night after, night after. So keep coming back, keep learning. Open up a paper trading account. Download Thinkorswim, this thing right here. Download Thinkorswim onto your laptop. Okay, don't use the online version. It's not as good. Okay, paper trade until you feel comfortable before you put real money in. Practice, practice, practice. Okay, Michael Jordan, Larry Bird, all the big basketball players would go 2 or 3 hours before practice just to practice. They practice before practice. Why? Because they want to be the best that they could be. So you practice before practice. That's why you get a paper trade. And I still paper trade. I do. I have a paper trading account that I try different trading strategies on. And I keep doing it. If it's profitable, great, I'll do it. If it's not profitable, well, I didn't lose anything. What's your trading method? We already did that. Can you see all your trades on your website, or do we have to pay for access? I know, all my trades are right here. Hold on a second. You go here to the 10minutetrader.com, okay? Onto the 10minutetrader.com, okay? You slide all the way down to where it says current trades for 2024. Go a little bit lower and it says view all. Click on view all and there you have it. All my trades for this year. Okay, slide all the way to the bottom and you go to week 1, first quarter. Okay, week 1, first quarter. Week 2, week 3, week 4, week 5, week 6, week 7, week 8, 9, 10, 11, 12, 13, all the way to where we are today. Is that Hakuna? Hakuna, dude, I'm just getting ready to sign out. Catch you tomorrow, man. All right, Kitten Strength, what's your trading method? I already talked about that. Buying covered calls and selling, buying dividend stocks, selling covered calls against them. All right, you guys have a great night. I'll be done for the day. Jerry Neville, holy shit. Jerry Neville, what's happening, dude? Hope you're doing well over there. Holy cow. Not quite sure. Teddy's here. Teddy DeCroach. I don't know if you remember him. But anyway, Jerry, it's been a long time since I heard or seen you. Anyway, I'm just getting ready to finish up for the night, dude. Come back tomorrow night. I'm here every single night, 9 p.m. to 11:30 p.m. Have a great night, you guys. See you tomorrow. Okay, done over here at Instagram. Bye, y'all. All y'all. All right, done here, you guys. Catch you guys later. Okay, down here, catch you guys later on Ubity Tubity. All right, and you guys down here, I will catch you guys again tomorrow. Same bat time, same bat channel. Have a great night.